Welcome to the European Market Open. A minute to go into the start of cash equity trading. I'm Tom McKenzie in London, and here are your top stories. Hawks in Frankfurt. More ECB Governing Council members say half-point hikes should be on the table, but President Lagarde says there is no rush.
I believe that gradualism is actually the way to go as long as inflation expectations are well anchored.
Yeah.
If we were in a situation where we anticipate de-anchoring, or if we had a surge in demand, that's a different story.
Inflation is out of control and investors are losing faith in the Fed's ability to fix it. That, according to Bill Ackman. We get Fed Minutes tonight. Plus, plenty more interviews throughout the day, of course, from the World Economic Forum in Davos. Don't miss our conversations with the NASDAQ CEO, Adina Friedman, Jose Vinales, the chairman of Standard Chartered, and Julie Sweet, CEO of Accenture. Okay, let's check in on these markets then. Futures pointing to some modest upside. The last time I looked, about 0.8% after the losses we saw across European markets. And of course, the US yesterday. Within the US session, most pronounced once again within the tech space, particularly the NASDAQ, of course, that ending lower around 2%. The S&P 500 ending lower by about 0.8%. It seems that the market's concerns have shifted from inflation to recession. We've started to see a repricing in terms of the views on the Fed funds rate down to 2.95 now for the middle of next year, when it had previously been above 3%. You're starting then to see that reflected as well within the bond space, and you saw a sharp move in terms of yields lower yesterday, particularly pronounced at the 2-year, a 16 basis point move lower. That's corrected to some extent, only marginally within today's session. In terms of the gains that you're seeing now in the European Open, the Spanish IBEX up more than 1%. The FTSE 100 is up 0.6%, higher by about 42 points. The CAC 100 also in similar territory, up 0.7%. We'll continue to listen out for any more voices from the ECB as that debate clearly heats up. Madame Lagarde has said we will be out of negative territory by the end of the third quarter. That is not enough for some of the hawks, as we said in the headlines. The FTSE in Italy gaining 0.9%. Let's switch it over and see how things are playing out then cross-asset. We look ahead to the futures on a day when we get those FOMC minutes and any more clarity on the direction of travel for the Federal Reserve. The futures then looking at gains of 0.8% for the tech-heavy NASDAQ. The US 2-year 251, so just a slight move in terms of the basis points, about 3 basis point move after those significant moves into treasuries yesterday as that shelter for havens on recession risks. You had that weaker data coming out from the Richmond Fed in terms of concerns around consumer or business sentiment, and of course those home sales as well. Euro dollar 106, currently down by 0.4%. Bitcoin, just as a gauge of a risk sentiment, currently below 30,000, 29,737, up 1%. Oil, by the way, as well is gaining today after suggestions and reports around the stockpiles decreasing stateside ahead of the summer driving season. We have a breaking headline now crossing Pfizer, of course, the drug maker, and behind that all-important mRNA vaccine, saying that they will sell brand drugs at cost to low-income countries. That is an announcement then from Pfizer around their brand drugs being sold to low-income countries. They're going to start with a small number of countries and then expand that over time. So an important announcement there from that US drugs maker. We'll get more as and when that comes through. Let's go over to Bloomberg's MLive managing editor now, Mark Cudmore. Mark, what are you looking at this morning?
Good morning, Tom. Well, I'm looking at the Bloomberg US Economic Surprise Index, which plunged yesterday into negative territory, i.e. US data is starting to disappoint consensus forecasts. And that's why this week we're really kind of focused on the stagflationary theme is taking hold in the US. I think we might be getting maybe particularly excited for the next week or two, and that may pass again. It'll stay in the UK. But the real reason for this yesterday is, as I said, that terrible US homes data out of the US. And I think it's a dynamic that we saw in Canada already, and it's going to repeat around the rest of the world. I think places like the UK and Europe should be vulnerable. I think too many of financial markets are forgetting that people don't buy houses based on informed perspectives of where they expect house prices to trade over the next few years. It's not a bullish view that, oh no, we better buy now, we're going to want to buy more later on. It's the idea that they buy based on affordability metrics. So we recently had a massive demand for housing around the world, and that's because everyone's just reading about the fact that mortgage rates are going to go higher. So they front load their purchases, they rush them up, but that means it provides a false froth to the market. It's not that there's this real strong underlying demand. Once those mortgage rates go up, that demand disappears very rapidly, and you can expect rapid house price corrections around the world. Canada, US, UK, many countries in Europe are all going to be vulnerable to this dynamic over the next year.
Okay, watch the house prices, as you say, as 30-year mortgage rates in the US above 5% now. You're seeing pressure, particularly in Canadian house prices, and some suggestions that it's starting to soften as well, the sector here in the UK. MLive managing editor Mark Cudmore, thank you. Okay, let's get straight to the markets then, and the fear of a recession, which has been on the minds of our guests, and of course the World Economic Forum in Davos.
For the moment, we are not seeing a recession in the euro area.
But clearly the economy is starting to weaken. But it really, to me, comes down to inflation.
Supply shocks, demand shocks, all together mixed in one. Of course it is unclear at this moment in time.
We may see prices even going higher, being much more volatile, and becoming a major risk for recession for the global economy.
I worry about a recession.
Eurozone and European Union will not go into recession. There will be a slowdown. But, you know, labour markets are so tight.
Right. There is now an increased risk of recession, but we do not anticipate a global recession.
Okay, joining us now is Monica Defond, head of the Amundi Institute. What is the top risk for you at the moment, Monica, when it comes to inflation versus recession concerns?
Hi, good morning. Well, I think that it's worth to look at the combination between the growth and inflation, because this is what is on everyone's mind, including the central banks. We think that the world is fragmented, meaning that there are several idiosyncratic stories. And when it goes to Europe, this is where actually most of our concern goes. We think that the euro area is really working on a tightrope, flirting with this zero technical recession risk. Vice versa, in the US, fundamentals are much more stronger. Therefore, the recession risk is still a tail event in our mind.
Okay, so the risks around recession more pronounced here in Europe. Of course, we had Madame Lagarde coming out yesterday saying that is not the base case of the European Central Bank. When it comes to the US Central Bank, the Federal Reserve, and the repricing of these markets, what are the implications for asset prices as you start to see that repricing the Fed funds rate from 3.4 mid next year to around 2.95 now?
Well, first of all, a lot of volatility. Volatility bodes well with uncertainty. And this is why on the risk asset, we decided to trim to neutral our exposure with a tactical play on the investment grade US, just because we thought that the recession fears in that asset class were overdone. Having said that, it is important to look through earnings. So the corporate earnings, we do believe, might flag and shed some light on the real status of the economy and fundamentals.
And indeed, we're starting to see that, and notably, of course, with the likes of Target this week. But at the higher end, Nordstrom coming out with some positive results. What does that tell us about the makeup of the US consumer, that divergence, and how you invest alongside that split that we're starting to see?
You know, if you analyze the consumer, as you were telling before, the status of the consumer wealth is good. Now let's look at what the housing market would flag. But overall, the U.S. consumer is in a better shape when compared to the EU consumer. Do not forget that the fiscal impulse out of the U.S. has been much, much bigger than the one that we have seen in the euro area. So while on the growth stocks, it might be an healthy normalization, and also on the sectors that have been booming after the COVID, it is a kind of a readjustment. It is worth to look at the corporate that have show healthy earnings, high dividend yield, kind of a value tilt.
Do you see any opportunities, Monica, at this point within growth, within technology? Is the sell-off there started to bottom in your mind? Are you looking at anything within that sector?
We do believe it's not the time to play on directional bets, so it is always better to temper the risk allocation of your portfolio and moving in the relative space. So if we have to position, it would be value versus growth.
Okay, still value versus growth. Monica Defond, head of Amundi Institute, stays with us. Get more of her calls after the break. Coming up, plenty more interviews throughout the day from the World Economic Forum in Davos. Don't miss our conversations with the NASDAQ CEO, Adina Friedman, Jose Vinales, the chairman of Standard Chartered, and Julie Sweet, CEO of Accenture. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
I believe that gradualism is actually the way to go as long as inflation expectations are well anchored.
Yeah.
If we were in a situation where we anticipate de-anchoring, or if we had a surge in demand, that's a different story.
Okay, Christine Lagarde talking to Francine Lacqua yesterday, more from that interview throughout the day. And talking of the ECB, a couple more lines crossing the terminal right now from a couple of governor members from Finland and also from Italy. So Fabio Panetta talking about what he's seeing in terms of the data, saying the ECB needs to avoid the risk of a normalization tantrum, but saying it is right to gradually normalize rates. The outlook justifies gradually exiting negative rates. Don't forget, of course, the president of the ECB telling Francine Lacqua yesterday that she expects to get out of negative territory by the end of the third quarter. But we know, of course, the hawks within the ECB Governing Council are concerned that the door remain open for more aggressive hikes. In terms of what we're hearing from Olli Rehn then, the ECB's Rehn saying that upside risks to inflation have clearly increased. The ECB should raise rates by a quarter point in July, says Olli Rehn. That seems to dovetail what we've heard from Madame Lagarde. Panetta saying that he does not see ugly inflation scenario materializing. He has, though, pointed out that the data is starting to soften in terms of the growth prospects for the Eurozone. And again, Olli Rehn saying the medium-term inflation expectations are near the 2% level. There will be economists out there who will take issue with that forecast. So just a couple of lines there crossing from governing board members of the ECB as we continue to look for clarity on the stance after the president of the ECB said that out of negative by the end of the third quarter is still what she's looking at, with no base case for a recession. That was Madame Lagarde, of course, speaking yesterday. Okay, inflation is out of control. Staying with the question of inflation, central banks and investors are losing faith in the Federal Reserve's ability to contain it. That is the view of Bill Ackman, spelled out on Twitter. The Pershing Square founder tweeted that the only fix is aggressive monetary tightening or, quote, a collapse in the economy. He says if the Fed doesn't do its job, the market will do it, and that is happening. That is what is happening now. He's particularly pointing to the long end of the yield curve. Monica Defont, head of the Mundi Institute, is still with us. Monica, we briefly touched on this at the top of the show, but is it your sense that the Fed is now going to be forced to pause, given the weakening economic data that we're getting out, and given how much financial conditions have already tightened?
We think that the Fed will continue to hike at all the remaining meetings in 2022, and we do expect 50 basis points in June and at the July meeting. Then they will see, because the political pressure on the inflation metrics will somewhat dilute, just because we expect the cliff on the inflation prints. Vice versa, in the Eurozone, the situation won't be similar, and there is a risk that I think the market is underestimating that relates to food commodities. If you look at the food prices, this is increasing, and this is going to be particularly painful in the euro area, just because of the basket composition and just because of the European consumer being in a worse position when compared to the US ones.
Okay, and I have a question when it comes to your call on value, because that's where you said you still have a preference, you still have a bias for value. Does that start to unravel if we see yields capped at these levels, if you see increased demand for bonds, as you see this risk haven status that is now being reconfirmed within sovereign bond space?
I think the risk would be more related to economic growth. So should growth deteriorate, then will be when the value stocks might struggle. So I see it more related to the growth dynamic than else.
Okay, I need to ask you, Monica, about our question of the day when it comes to the MLive Pulse survey. We had a lot of news, of course, out of China, and question marks and a lack of clarity over the COVID zero policy there, even as stimulus measures and a 33-point plan comes out from the State Council. Are you going to be, and would you advise, increasing your exposure to China over the next 12 months or decreasing? What is your view on how much exposure you want to be having to that market within the next year?
If we have to express a preference, it would be on the fixed income rather than the equity. Honestly, on Asian equities, where apart from India, we're a bit more cautious, having in mind that when it goes to GDP projection, for example, we have a 3.5, which is it is a bit lower than the official target of the authorities, which, if you want, asks for more accommodation coming from the authorities, but it is still much lower than the official target. This is the reason why we are more cautious on Chinese equities. Look at the MB. There, because of the composition, more tilted to commodities exporter, you might get some yield and value.
What would you need to see to turn positive on Chinese equities, Monica?
Really seeing the economy accelerating. There is already some evidence on the micro data, but we think that China is back on a sequential growth. We need to see more. So a catch up towards the official target or a little bit below.
Okay, when it comes to earnings per share growth and what that means for valuations going forward, which sectors are kind of least vulnerable at this point? What are you looking at? I know you've talked to us about the opportunities within value within this very volatile market scenario, but which sectors are the least vulnerable within this environment when you look at a potential drawdown in terms of earnings per share?
It will really be depending on the evolution of growth. So if I have to express a preference, it would go to the US versus the European market, just because we do have a 5-9% projection on the EPS on the S&P, while on the Eurozone, it might be also the case to have a profit recession. So maybe rather than moving into sector story, play on the geographies that are strictly linked to the economic dynamics.
Okay, so play the geographies. Your favored space still regionally would be the United States, and of course favoring value within a torrid environment for equities. Monica de Font, head of Amundi Institute, thank you for those insights. Right, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. The sale of Chelsea Football Club's US investor Todd Boehly has been approved by the UK government. The clearance of the £4.25 billion sale by Russian billionaire Roman Abramovich ends months of uncertainty for fans and staff of the London club. Glencore has admitted to more than a decade of bribery and market manipulation. The Swiss commodity trader will pay about $1.5 billion to settle probes in the US, UK and Brazil. Glencore units have agreed to plead guilty to charges including bribery, corruption and price manipulation. Bank of America is boosting pay for tens of thousands of US employees that earn less than $100,000 a year. Base salaries will climb as much as 7% for workers who have been with the firm since 2021 or earlier. The size of the raises, which start next month, will depend on time spent at the company. Elon Musk's personal wealth has fallen below the $200 billion mark. The world's richest person saw his fortune drop by more than 5% yesterday as Tesla shares fell. They've tanked 43% since he announced plans to buy the social media company Twitter. Musk's wealth remains a long way ahead of Amazon's Jeff Bezos, though, the world's second richest person. That's the Bloomberg Business Flash. Tom Francine.
Laura, thank you. Coming up, plenty more interviews throughout the day from the World Economic Forum in sunny Davos. Don't miss our conversations with the NASDAQ CEO, Adina Friedman, Jose Fernals, the chairman of Standard Chartered, and Julie Sweet, the CEO of Accenture. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Tom, this is a major concern for us. I mean, it's not just India, but if you look at food exports, since the start of the war, around 20 countries have put restrictions on food exports, be it wheat or be it palm oil and many other such products. And fertilizers also are in serious shortage. So we worry a lot about what's going to happen with food prices. I think it's one of those prices where there's probably more that's going to go up in the future than what we've already seen, and it is a major concern.
The history here is a domestic government will come to the rescue, flatten prices like the cost of bread in Egypt has been flat for decades, and subsidize whatever the commodity is until it breaks. How close in your study, country to country, are we to a breaking point of that domestic subsidy to feed people?
Look, after 2 years of the pandemic, governments around the world, especially in countries like Egypt, do not have the fiscal space to provide widespread support. And this is something that we are tracking very closely, exactly this question of how many countries are now facing these rapid increase in import prices and therefore are likely to have balance of payments problems. This is one of the trackers that we have. And this is a major concern.
How much is this a failing, frankly, of the developed world from supporting Ukraine more? In other words, from actually providing more financial aid in order to get some of those supplies to the rest of the world?
You know, this is a very challenging issue about how to get Ukraine's supply out of Ukraine. The problem is the embargo on the Black Sea. I mean, you just cannot get the ships to take the wheat out. Thinking of creative solutions in terms of putting them on trains and sending them out through that way, but that's going to take a lot more time. In addition to the war, we're also seeing the effects of climate change around the world, and one of the reasons why India has put its export restrictions on wheat is because of poor yields and bad weather. So that's another big negative. But we really do need to try very hard at this point to try and get supply up as much as possible around the world.
IMF First Deputy Managing Director Geeta Gopinath speaking to Bloomberg, of course, at the World Economic Forum in Davos. Let's check in on some of the individual stocks that we are monitoring for you today. Glencore front and center for us after the announcement that it will be paying around $1.5 billion US dollars to settle probes ranging from Africa, Latin America, even to price manipulation within the United States. A huge number of cases of bribery and manipulation that Glencore has been accused of, paying that probe or fine of $1.5 billion US dollars. The stock actually up 2%. Marks and Spencer's coming out with an earnings beat, up 0.7% in the session today, almost close to 1%, but warning of the impacts of the exit from Russia and the cost of living crisis. And then the energy company SS&E up, look at that, 5.5%. It was a strong earnings beat as well for that company, looking to invest around $25 billion this decade in infrastructure. Stay with us. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. We are 30 minutes into your European trading day, and here are the top stories. Hawks in Frankfurt. More ECB Governing Council members say half-point hikes should be on the table, but President Lagarde says there is no rush.
I believe that gradualism is actually the way to go as long as inflation expectations are well anchored.
Yeah.
If we were in a situation where we anticipate de-anchoring, or if we had a surge in demand, that's a different story.
Inflation is out of control and investors are losing faith in the Fed's ability to fix it. That, according to Bill Ackman, we get Fed Minutes tonight. Plus, plenty more interviews throughout the day from the World Economic Forum in Davos. Don't miss our conversations with the NASDAQ CEO, Adina Friedman, Jose Vinales, the chairman of Standard Chartered, and Julie Sweet, CEO of Accenture. Let's check in on the markets then, 30 minutes into this Wednesday trading day, as investors stateside started to reassess the risks of recession. Softer housing data, softer business sentiment surveys from the Richmond Fed, all leading to that reverse in sentiment that we saw towards the end of the day yesterday. So negative was the close on Wall Street. You also ended in the red in Europe. But you're seeing gains now, modest gains of around 0.6% across European stocks. The DAX up 0.4%, and the FTSE 100 gaining 0.5 as well. Basic resources, and we'll switch it on and have a look at how the sectors are playing out, because basic resources is top of the pack. 1.7% is the gain for that sector. Energy also up. There was a survey on stockpiles out of the United States suggesting they've shrunk more than many had expected leading into the summer driving season in the United States. So oil is up on the back of that. Utilities also bid, a bit of a safe haven sector for many, up 1.6%. 4 or 5 sectors in the red, 5 sectors in the red at this part of the session. Consumer products and tech also lower by 0.2%. We've had some pressure on the euro on the back of some most recent comments out of ECB Governing Council members, Mr. Olli Rehn of Finland and Fabio Panetta of Italy. Mr. Panetta saying that you want to avoid a normalization tantrum, and Olli Rehn suggesting that 25 basis points is appropriate in terms of the hike for the month of July. Right, let's get back to Francine Lacqua, who is live in Davos with another important interview for us. Good morning, Francine.
Good morning, Tom. Thank you so much. Yeah, we're now joined by Jose Ignacio Galan. He's the chairman and chief executive of Iberdrola. Iberdrola on its way to be one of the most important players when it comes to electrifying and, of course, renewable energy space in Europe. So, Mr. Galan, as always, thank you so much for joining us. There's so much to talk about because of the concern that inflation is going up, and actually we're trying to electrify. We're trying to be more green, but the transition will be much harder.
So, well, I think it's not new for us. We are more than 20 years trying to make that thing, how to electrify the economy, how to make already the utility much sustainable, how to avoid already to work with fossil fuels and to invest in renewable, in grid, in storage. And now I think it's a great time. Everybody recognizes that that is the way we have to make.
But is there anything that you need from governments, from policymakers to make it easier? So the Commission, the European Commission, has a huge ambition for the transition. What do companies need to produce more renewable energy?
Well, I think the European Commission, has, in my opinion, has to make a great job already leading the energy transition in Europe. The Fit for 55 document, it was a great document, but now they are making another document which I call, instead of repower of Europe, I'm calling Fit for self-sufficiency, which I think is being self-sufficient, we will achieve the Fit for 55 objectives. Yeah. And I think they're providing certain tools for that one. The first one is already to provide, to make easy all the permitting process. Mm-hmm. The second one is to provide stable frameworks for making that happen, for attract already the capital. And the third one is to try all the necessary to make incentivize industries to transform the way how they're doing the things in a different manner. I can tell you, we have plenty of industries which are calling us how to decarbonize their processes. That's new, and that is thanks of this leadership of the European Commission.
Will it take longer, actually, than you thought? So first of all, if you look at the energy plan from the Commission, has it changed your strategy? Are you doubling down on anything?
Not at all. What is already increased our commitment to accelerate our investment to help already in this decarbonization. I think our plan of 2025 is to invest on the range of 60 billion euros, which I think is almost 50% more than the previous plan. So I think we are trying to accelerate that one in the same thing. More renewables, reinforcement of the grid, which is something that people start talking about. I think people were talking in the past about renewable. Now people start talking about the need of...
But it's very difficult to find the components. It's very difficult to actually ramp it up as fast as we need it to.
Well, look, the fact that the European Commission and the member states are already aware that if they would like to solve the crisis situation they're facing, and the best solution is already to become less dependent on the fossil fuels, are making then all of them things, ways how to make the things easier for us.
Talk to me about the UK specifically, where you have big operations. So is the UK, actually there's a windfall tax, we're talking about it. Have you had conversations with the government over this?
The first thing, I think, when we talk about energy, we are not talking about electricity. Electricity, in the whole consumption, electricity represents less than 25% of the whole energy demand. 75% of the energy is fossil fuels. 25% electricity, and part of this electricity also is produced with fossil fuels. So we are far. So the first thing is, please, when we talk about energy, we are talking about fossil fuels. We are not talking about electricity.
I know, but is that the conversation you're having with the government in the UK? Are they
well,
making
I
a
think
difference?
in the government, the first thing I'm not aware, but I think what I heard this morning is that nothing has been done in this respect. I think they are thinking about different possibilities, but not already to make windfall tax of those companies which are not having extraordinary benefit. In our particular case, Scottish Power, is the result of the first quarter is 30% less than previous year. Why? Because we are selling a fixed price and we are forced to buy much expensive price of energy we are selling.
Mr. Glenn, if there's a windfall tax, would it make you rethink your investments in the UK?
Well, look, I think stability, predictability, rule of law are the conditions for making investment which stand for 40, 50, 60 years. Our plan in Britain is to invest £10 billion from now to 2025. And we keep already this plan to continue making this investment. But I think if the rules change, I think certain, my investors, with most of them are British, they will ask to me why. So, I need already to have argument. But our commitment is to continue investing £10 billion from now to 2025 in networks, in renewable, mostly offshore, and in reinforcing the grid. Then we have.
But Mr. Glenn, just so I understand, I mean, your point is that basically because you do renewable energy and things like that, then you shouldn't be subject to the windfall tax, or what is going on with politicians?
Well, I don't know, because nothing has been published on the respect. So I think in the moment if they publish anything, we will analyze. But I think it's very important, and I said all time here in those days in Davos, is needed huge investment to transform and to diminish our external dependency and to be self-sufficient. So we need to make already frameworks attractive, stable, predictable, in which the rule of law is crucial, because if not, we will not raise the money, especially in a moment when the price of money is increasing. So I think it will be a good excuse, because of the uncertainty, to increase even more that way.
So who could do more? Is it regulation? When you talk about rule of law, is it politicians? Is it politicians in the UK? Is it the Commission? Like, what do you need today from people in charge to help in the transition even more than you do now?
I always said coherence between targets and policies. So those, I think, is long-term plans which are clear in Britain. So they are a target for decarbonizing the economy. They are target for increasing the number of renewables in the system. And the regulator have to follow those things, making the thing attractive. So this coherence, which is not only in Britain, everywhere, I think is the coherence between goals and targets and policies. And those, we have to apply those policies. And I think Britain up to now has been globally quite coherent. So I'm convinced that Britain will continue on the same path it has been for many years. That was make ourselves to have already decided many years ago to invest as much as we have invested in Britain, which almost had already put in £30 billion in the country, so which I think is a lot of money.
But Mr. Galán, thank you so much for joining us today. Jose Ignacio Galán, they're the Chairman and Chief Executive of Iberdrola. Tom, with that, I'm going to send it back to you in London.
Francine, thank you very much indeed. Okay, coming up, despite inflation fears, consumer spending continues to hold up. That is the view of Bank of America CEO Brian Moynihan. We will bring you that interview next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open. We are 42 minutes into the European trading day. You're seeing gains of 0.6% after the losses that we saw across Europe and the US yesterday. Talking of the US, S&P E-minis pointing to gains of 0.3%. The Nasdaq, which fell around 2% yesterday, up in terms of the futures by 0.5%. Euro-dollar is softer today on the back of some additional comments from ECB Governing Council members. Olli Rehn suggesting that 25 basis points is appropriate in July. Let's turn our focus to China now, where President Xi Jinping continues to pursue a strict COVID-0 approach. The measures have now extended to invasive home disinfections. This comes as officials in Beijing are punished over 2 COVID clusters that have flared up in the capital. For more, Enda Curran, our chief Asia economics correspondent, joins us from Hong Kong. And just get us up to speed on the downgrades that we've seen for forecasts for the world's second largest economy, how likely or unlikely that country is to meet its ambitious growth targets for this year.
Well, exactly, Tom. So you've got this aggressive COVID-0 strategy going on, but as you mentioned, at the same time, the economists are downgrading their growth forecasts. Our own new median forecast of economists now look for growth of around 4.5% for the economy this year. That's well below the government's official growth target of 5.5%. And that speaks to the kind of downward pressure that there is across the economy. There was a meeting amongst the PBOC and banks yesterday where the PBOC is encouraging banks to lend more money into the economy, but the feeling is that actually there is no shortage of money. It's more that people just don't want to borrow. That appetite isn't there. And we had some of the state press today on the front page is carrying a message from Xi Jinping that the government is pretty much deadly serious about making sure the economy doesn't fall into a hole. But as you mentioned, this survey of economists shows you just how much of a gulf there is now between what the government's talking about with the official target or what they initially aspire to and what's happening on the ground.
So we're going to be watching the credit data coming out of China going forward, the importance of that and to what extent they've been successful on leaning on the banks to lend more. But when it comes to that COVID-0 policy, these videos that we're seeing online of people having their apartments and homes turned upside down by the dabai, the big whites, as they call them, spraying disinfectant in their homes. I mean, this just all points to the COVID-0 policy remaining very restrictive, and there's a lack of clarity still.
That's right, Tom. I mean, obviously the policy differs in different parts of the countries, as you know, well, from city to city, but the broad approach is still a pretty aggressive approach to containing COVID. And a lot of analysts are just saying, look, from the economic point of view, how can that be sustained given the transmissibility of Omicron? And that's, I think, what a lot of people are thinking now. But the second half of the year, that there's a view that maybe China's economy has bottomed, maybe they're broadly keeping the virus under control, but nobody's seeing the kind of snapback in China's economy that there was in 2020, for example. No one's seeing that kind of V-shaped recovery. They're seeing ongoing stop-start measures against COVID, and of course, with all the obvious implications that that has on the economy, and that's why we're seeing these growth downgrades that we are in the survey today.
And the broader implications for the global economy, of course. Enda Curran, as ever, fantastic. Thank you, our chief Asia economics correspondent, joining us out of Hong Kong. Okay, let's get back to views on the US consumer, the health of that economy. Now, the boss of the Bank of America says US consumers are actually holding up quite well against inflation, increasing their spending and paying down their credit card balances. CEO Brian Moynihan spoke to Bloomberg's Tom Keene and Lisa Abramovitz.
The account balances of a consumer pre-pandemic to now are multiples bigger. So a person had, 2,000 to 3,000 average collected balance in accounts. Now has, and that would have been about 1,400. 1 to 2,000 would have been about 1,400. Is now almost $4,000. A person that had 2,000 to 5,000 would have about 3,500 on average. It now has $13,000. So just step back and think about it. It grew 5% in the month of April from March. So what you're seeing is consumers have more money in their accounts. The idea that they spent the pandemic money that came in January, March last year, just not true. Now, the second question is they pay down their credit card balances. From 100 billion we were down to 70, it's back up to 80, lots of borrowing capacity. The third point is, are they spending? And that's what's interesting. In the first 2 weeks of May, the consumer spent 10% more than they did last May. That's over top of the payments that went out to pay taxes. So the consumer spending, and people say, well, it's inflation-driven. 8% more transactions. Somebody doesn't use...
I don't want to interrupt because we're going to extend this to 45 minutes. This is the real Moynihan, guys. This is the bank nerd giving us the operational stuff here.
But this actually goes to the heart of a lot of the economic questions of the moment, right? Because everyone's talking recession here and stagflation. We were speaking with Bob Prince of Bridgewater. What you're saying does not scream of stagflation or recession.
So that's why I said this. We were talking earlier. This will make the job, the Fed's job hard and easy. Easy in that you have consumers in good shape, not over leveraged. The home values went up, but frankly, our LTV in our portfolio is in the 50s. So to give you a sense, so the prices went up and people didn't borrow it out and stuff. So that's the good news. The bad news is what's going to slow them down. So if you look at TSA travel Sunday, it was over top of 19 by 10%. That's a number of people went through the airport.
So what's going to slow them down?
Yeah, so what's going to slow them down? Nothing right now. And so the question is, so the Fed has this very difficult thing of getting them to slow down without slowing them down too much. And then the second thing is, the unemployment rate is really low, and so if you look at our Michael Hartnett's a great economist. He's got this year mid to high two. He's got next year mid ones, but it's slowing down the next year. If you look at his quarters, it's slowing down. So the idea is the Fed's work slows you down. Now the problem is he still has unemployment 3.5%, 4%. You're saying, wait, that can't slow. You can't slow a consumer down is working because they have money to spend. So that's a difficulty. I believe that they're going to be able to manage this flow, but it's going to be a tricky execution. Then there's things outside their control, the pandemic resurgence, something going different in the war. But America's much different than Europe and other places because of this dynamic of the vibrancy of the U.S. consumer.
Bank of America CEO Brian Moynihan on the relative strength of the U.S. consumer. Okay, let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. President Biden has called for new restrictions on firearms after a gunman killed at least 19 children and 2 adults at a Texas elementary school. Police reportedly killed the attacker at the scene. He's been identified as an 18-year-old man who was armed with a handgun and possibly a rifle.
As a nation, we have to ask, when in God's name are we going to stand up to the gun lobby?
Pfizer says it may sell its entire portfolio of brand name drugs at a cost as much as 45 lower-income countries. The initiative will start in 5 African nations with drugs for cancer, rare illnesses, inflammatory conditions, and infectious diseases. The plan is one of the most comprehensive drug access programs ever announced by a large pharma company. US banks and individuals have been barred from accepting bond payments from Russia's government. That's after the Treasury Department let a key Russian sanctions waiver expire at midnight New York time, pushing Moscow closer to a potential default. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura, thank you. Okay, coming up on the show, commodities giant Glencore is to pay $1.5 billion to settle bribery and manipulation probes that have hung over it for years. We will bring you the details of that story next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Crypto, you have a world of young people that want their own financial system and their own culture. And It is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 53 minutes into the European trading day. Modest gains across these equities after the losses that we saw yesterday, up 0.6% for European equities. Future stateside, the S&P E-minis pointing to gains of 0.3%. The Nasdaq futures pointing to gains of 0.5%. Let's get back to one of the big corporate stories of the day. Commodities trading giant Glencore will pay about $1.5 billion to settle probes into corrupt payments made in Africa and Latin America. Traders used code words to account for bribes which earned the Swiss firm millions in profits. That is, until the company got caught. For more, we are joined by energy and commodities reporter Jack Farty. Jack, it's a remarkable story in some ways, and on some levels, unsurprising. Give us the details of what is unfolded and what the implications are then for Glencore.
Yeah, I mean, this case has been going on for a number of years now, about 5 years. It's been hanging over the company, and finally now we get the details of what they did wrong. The US came out yesterday and said, and Glencore admitted, that the company was paying bribes, paid more than $100 million of bribes over the course of 10 years in 7 countries, Brazil, Venezuela, 5 countries in Africa. Really, you know, the case of the US government was that this was something completely endemic in Glencore. The quote, I think, from one of the US prosecutors was, bribery was built into the corporate culture. The tone from the top was clear. It was whatever it takes. And that's a pretty damning indictment of what is the world's largest commodity trading company.
That is very damning, as you say, endemic, part of the corporate culture. So when will executives be held to account? Senior executives, are they likely to face consequences, Jack?
Well, that's the fascinating question. I mean, so far, we have this sprawling case against Glencore. About 18 months ago, there was a similar case against Vitol, the world's largest oil trader, which admitted to paying bribes over a number of years in 3 countries in Latin America. So far, no top executives have really faced any consequences from this. It is interesting to hear some of the US prosecutors saying yesterday, talking about the top executives. Another quote, Glencore did this with the approval and even the encouragement of top executives in some of the charging documents, and the facts that Glencore has agreed to are mentioned anonymously, some apparently very senior executives of Glencore. So I think it's an open question whether we will yet see the US government or some other government moving against some former senior executives of Glencore.
Just briefly, the stock up 1.6%, which arguably some would point to suggests and just underscores the perversion of how these deals and probes are dealt with. Just briefly, Jack, are they able to clean themselves up?
Well, if you talk to Glencore and listen to what Glencore is saying, they say we're already a different company, and it's certainly true that the personnel has changed pretty dramatically. All of the top executives who were there in that period of 2007 to 2018, when this case which this case is about, have left. The company says it's put in place new compliance, new ethics measures, and it's a new company.
Jack Farty, energy and commodities reporter on that Glencore deal, around $1.5 billion to pay for that probe. Thank you for the details. That is it for the European market open. You're seeing gains of 0.6%. Futures US stateside pointing to gains of 0.3. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I believe that gradualism is actually the way to go as long as inflation expectations are well anchored.
The third point is, are they spending? And that's what's interesting. In the first 2 weeks of May, the consumer spent 10% more than they did last May. And that's over top of the payments that went out to pay taxes. So the consumer spending, and people say, well, it's inflation-driven, 8% more transactions.
In the last few quarters, we had our fair share of volatility. We actually don't see claims, but we, fears of what could happen. And of course, all this is coming at a moment in which the economic outlook is not so rosy.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 25th of May. I'm Francine Lacqua here in Davos. It's day 3, and here's what's coming up on today's program. Hawks in Frankfurt. More ECB Governing Council members say half-point hikes should be on the table, but President Lagarde tells me there's no rush.
I believe that gradualism is actually the way to go as long as inflation expectations are well anchored.
Yeah.
If we were in a situation where we anticipate de-anchoring, or if we had a surge in demand, that's a different story.
Inflation out of control and investors losing faith in the Fed's ability to fix it. According to Bill Ackman, we get Fed Minutes tonight. And don't miss our conversations with Adina Friedman, President and Chief Executive Officer of NASDAQ, Jose Maria Vinales, the Chairman of Standard Chartered, and Julie Sweet, the Chief Executive of Accenture. All of this coming up from Davos. Now, first thing is first, so let's check on the markets because there is quite a lot going on. When it comes to the markets, yesterday was a big day for technology. Today, a big day also for some of the currency moves that we're seeing out there. Now, stocks are rising. The rate path still the number one thing that investors want to know about. Yields and Treasury yields actually stabilizing after a sharp retreat as markets now assessing the outlook, of course, for the Federal Reserve monetary tightening. Dollar still pushing higher. Now, in the European stocks, you can see utilities, miners, and energy shares actually leading gains. U.S. futures also advancing overnight after stocks fell. Snap's profit warning pummeled companies that rely on digital advertising today. It does seem like we have a bit more, we think, famous last words, a bit more of a smoother transition. So we look for that. And then if you look at the European map, of course, the mood out there, not only talk about inflation, but the energy reliance to Russia. We had 3 great conversations this morning about officials from the Commission that were talking about the oil embargo. The last one in point was Commissioner Gentiloni saying we're just moments away, or at least a week away, from possible oil embargo against Russia. He thinks they'll be able to bring Hungary back into the fold. You can see we're seeing a screen across a lot of these European stocks. Now, one of the key topics, of course, dominating this year's Davos is the outlook for a global recession. This as the COVID recovery, war in Europe, and the energy crisis put pressure on the business and political elite attending the year summit.
For the moment, we are not seeing a recession in the euro area.
But clearly the economy is starting to weaken. But it really, to me, comes down to inflation.
Supply shocks, demand shocks, all together mixed in one. Of course, it is unclear at this moment in time.
We may see prices even going higher, being much more volatile, and becoming a major risk for recession for the global economy.
I worry about a recession. Eurozone and European Union will not go into recession. There will be a slowdown. But, you know, labour markets are so tight.
Right. There is now an increased risk of recession, but we do not anticipate a global recession.
Now we're joined by Adina Friedman, of course, President and Chief Executive Officer of NASDAQ. Adina, great to have you here. I mean, there's so much to talk about market volatility, and then we'll talk about NASDAQ and some of the things that you're putting in place there. But are you expecting a lot more volatility? Like, how's it like living it, you know, from the inside?
Yeah, I mean, I think right now it's really difficult as an investor to figure out what is the future, you know, what does it look like, right? And if you think about the stock market, it's really about investors predicting the future, earnings potential, and capabilities of companies. With all of the externalities that you just mentioned in terms of supply chain shocks, still from COVID, as well as the geopolitical risks, as well as inflation, I think it really makes it difficult for investors to make conviction buying decisions. It's a risk-off environment as a result, and therefore I think you are seeing a lot of liquidity. So news ends up having an outsized effect on investor sentiment when they don't have kind of conviction in the future. So I think that that's really what's playing out, and I think that will continue for a while.
So, while like certainly till the end of this year, could it be actually a lot longer?
Well, I think honestly it has to do with whether or not we can see that the Fed work, the work that the Fed is doing is going to have impact, positive impact on inflation, whether we're going to see any sort of progress on the geopolitical challenges in Ukraine, and whether or not we're starting to see some easing of those supply chain challenges. If you see any of those as positive signals, I think that will have a calming effect on markets. They are, as I said, investors will have a better ability to predict the future. They'll have a better ability to put their conviction behind certain companies and deploy their capital again. So I'm hopeful. I'm an eternal optimist, honestly, but I'm hopeful that as the year progresses, some of those unknowns will be more known and we'll have a little bit more calm.
So how does NASDAQ in this environment actually sustain revenue growth? I mean, you know, again, it's high volatility post-pandemic world.
Yeah, well, today NASDAQ actually is a broad technology company that serves the capital market. So about 70% of our revenue is recurring revenue from software and analytics capabilities that we provide to a really broad selection of companies. So whether it's corporate clients, investment clients, exchanges, and broker-dealers. So we have thousands and thousands of clients who use our technology solutions for anti-financial crime, investment analytics, indexes, as well as the markets. And as a result, we're kind of, I would say, I look at ourselves as a little bit more of an all-weather company. Volatility in markets creates a lot of trading, but of course it takes some of the, you know, the new IPOs are really taking a break for a while. At the same time, our software services are in many respects more important than ever. You know, banks' ability to manage crime management and root out their, you know, the sanctions and other things that they have to comply with. That is a great opportunity for our technology business.
Has that been difficult? I mean, going through all the sanctions.
We actually put a new sanction screening module in place for all of our banks, and because we are a cloud-based software solution, we can deploy that to all of our clients simultaneously. So we really try to make sure that we are very nimble in being able to manage and help the banks manage through those challenges. And I think at the same time, our investment analytics business, we provide the ability for asset owners to figure out where they want to allocate their assets. Well, right now it's a very dynamic environment, so they use our tools more than ever, frankly, to make different asset allocation decisions in this environment.
When are you expecting the IPO market to be back?
Yeah, we have about 270 companies that are on file wanting to come to NASDAQ.
From what region? Mainly Americans or
primarily the United States, but we do have companies that list from all over the world in NASDAQ. I think that the fact is, though, that as I said, it's a risk-off environment for investors. So they need to feel like if they're going to come out and deploy capital, that the investors are going to be ready to invest in them. And that is not the environment we're in right now. So I think that, you know, again, if we can see some of these unknowns become more known, and particularly in the United United States, if we see some easing of inflation, I think that will actually help give investors a little bit more confidence, and therefore, hopefully, we'll see the windows open in the second half of the year, but it's hard to tell.
So really they're worried about monetary policy adjustment or monetary policy mistake.
Well, I would say that it has more to do with, will the monetary policy changes have the effect on inflation we're looking for, and will supply chain challenges become eased over time?
How can the markets be improved?
How can markets be improved?
Function, in terms of the way they function?
I actually have to say, I think that if I look at just purely from an equities and options world, I think that we do actually feel like the markets have been incredibly resilient through a lot of shocks, like whether it's the COVID crisis or, all of the, frankly, the opportunities that came in the markets in the last couple of years, or the liquidity challenges we're having now in terms of volatility. I think that the markets have behaved well. However, it is always important to realize that it's a forever challenge to make it so that the markets really operate in an optimal way.
Is there anything that you would change in terms of trade or data usage?
Well, I think it has more to do with I think that there's some work that the SEC is doing to look at retail investment, institutional investment in the markets. How can we optimize market structure? How can we strengthen the national best bid and offer, which is the displayed price? How can we make it so market structure and more really works for all investors and brings more liquidity onto exchanges? That's, I think, you're going to see also play out in the second half of the year.
I mean, there's been so much regulation or so many regulation papers. Is it almost too much? Is it difficult to actually wade through what's really needed?
I think that the SEC is very busy, but they're busy across the spectrum of different areas of the market. Within the equities markets and the options markets, I think that they're still evaluating how they might want to evaluate some, propose some new improvements. And we're engaged with them as well as with our market participants to understand, what works, what doesn't. The big thing you have to worry about with regulation is the law of unintended consequences.
Yes.
So as you're putting a regulation in place, let's really go through a consultative period. Let's really understand what might happen. And I think that, but I also believe that it's always opportunity for improvement in markets.
Yeah, and you think that's happening? Is there a danger that actually regulation could go too quickly and so, put together haphazardly?
I actually think that the U.S. system is really built for that not to happen, and I say that because of the comment period, right? If the SEC proposes something, the industry comments, and then they do have to take that into consideration and do a lot of work on the back of that to turn a proposal into a rule. And at the same time, we obviously don't always agree with those rules, and in some cases we have challenged whether or not they've done their work. I think that in this particular case, they're still in that consultative period.
I think last year you also announced a deal, I guess, with the Amazon Web Services to move things to the cloud. How's that going?
It's going really well. Actually, what we've done is we've partnered with the AWS to bring an edge cloud compute system into the data centers that we operate in the United States. And we worked with them on a hyper low latency edge compute system, kind of co-developed that with them. So we're going to be moving our first options market into a cloud environment in Carteret in the latter half of this year. And it's on plan. It's going really well.
All right, wonderful. Thank you so much for joining us on our Davos set. That was Adina Friedman, the President and Chief Executive Officer of NASDAQ. Now, coming up, despite inflation fears, consumer spending continues to hold up. That's the view from the Bank of America Chief Executive, Brian Moynihan. We'll have more from that interview next, and this is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, the boss of Bank of America says U.S. consumers are holding up well against inflation, increasing their spending and paying down their credit card balances. The chief executive, Brian Moynihan, spoke with Bloomberg's Tom Keene and Lisa Bramford.
The account balances of a consumer pre-pandemic to now are multiples bigger. So a person had 2,000 to 3,000 average collective balance in accounts. Now has, and that would have been about 1,400, 1 to 2,000 would have been about 1,400, is now almost $4,000. A person that had 2,000 to 5,000 would have about 3,500 on average. It now has $13,000. So just step back and think about it. It grew 5% in the month of April from March. So what you're seeing is consumers have more money in their accounts. The idea that they spent the pandemic money that came in January, March last year, just not true. Now, the second question is they pay down their credit card balances. From 100 billion we were down to 70, it's back up to 80, lots of borrowing capacity. The third point is, are they spending? And that's what's interesting. In the first 2 weeks of May, the consumer spent 10% more than they did last May. That's over top of the payments that went out to pay taxes. So the consumer is spending, and people say, well, it's inflation driven. 8% more transactions. Somebody doesn't use.
I don't want to interrupt because we're going to extend this to 45 minutes. This is the real Moynihan, guys. This is the bank nerd giving us the operational stuff here.
This actually goes to the heart of a lot of the economic questions of the moment, right? Because everyone's talking recession here and stagflation. We were speaking with Bob Prince of Bridgewater. What you're saying does not scream of stagflation or recession.
So that's why I said this. We were talking earlier. This is what makes the Fed's job hard and easy. Easy in that you have consumers in good shape, not over leveraged. The home values went up, but frankly, our LTV in our portfolio is in the 50s. So to give you a sense, so the prices went up and people didn't borrow it out and stuff. So that's the good news. The bad news is what's going to slow them down. So if you look at TSA travel Sunday, it was over top of 19 by 10%. That's a number of people went through the airport.
So what's going to slow them down?
Yeah, so what's going to slow them down? Nothing right now. And so the question is, so the Fed has this very difficult thing of getting them to slow down without slowing them down too much. And then the second thing is, the unemployment rate is really low. And so if you look at our Michael Hartnett's a great economist. He's got this year mid to high two. He's got next year mid ones. But it's slowing down the next year. If you look at his quarters, it's slowing down. So the idea is the Fed's work slows you down. Now the problem is he still has unemployment 3.5%, 4%. You're saying, wait, you can't slow a consumer down is working because they have money spent. So that's a difficulty. I believe that they're going to be able to manage this flow, but it's going to be a tricky execution. Then there's things outside their control, the pandemic resurgence, something going different in the war. But America's much different than Europe and other places because of this dynamic of the vibrancy of the U.S. consumer.
Well, that was Bank of America Chief Executive Officer Brian Moynihan. Now let's get straight to the Bloomberg First Word News. In London is Laura Wright. Hi, Laura.
Good morning, Francine. President Biden has called for new restrictions on firearms after a gunman killed at least 19 children and 2 adults at a Texas elementary school. Police reportedly killed the attacker at the scene. He's been identified as an 18-year-old man who was armed with a handgun and possibly a rifle.
As a nation, we have to ask, when in God's name are we going to stand up to the gun lobby?
Pfizer says it will sell its entire portfolio of brand name drugs at cost price in as many as 45 lower-income countries. The initiative will start in 5 African nations with drugs for cancer, rare illnesses, inflammatory conditions, and infectious diseases. The plan is one of the most comprehensive drug access programs ever announced by a large pharma company. US banks and individuals have been barred from accepting bond payments from Russia's government. That's after the Treasury Department let a key Russian sanctions waiver expire at midnight New York time, pushing Moscow closer to a potential default. India is restricting sugar exports as a precautionary measure to safeguard food supplies, capping them at 10 million tons in the year to September. After Brazil, India was the world's largest sugar exporter last year. The move adds to a growing list of restrictions on food trade in recent days, including Malaysian palm oil and Indonesian chicken. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Thank you so much, Laura. Now we're live. Coming up, we're back live here at the World Economic Forum in Davos. We'll be joined by the Standard Chartered Chairman, Jose Viñals. That's in just a few moments. That's a conversation, of course, on banking. It's a conversation on recession and inflation. Don't miss that conversation. It's up next, and this is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We're on the cusp of it. The way we look at stagflation is in terms of how it affects markets. And the way it affects markets is if the inflation rate is higher than discounted and the growth rate is lower than discounted. And we're in a situation right now where there's a very low inflation rate discounted, therefore it's easy to be above that, and we've got a high growth rate discounted, therefore it's easy to be below that. So relative to what's discounted, we could very easily be into this very quickly.
Well, that was Bridgewater's Bob Prince talking to us about stagflation. Now, the UK government, in other news, football news, the UK government has approved the sale of Chelsea Football Club to American investor Todd Boehly. Now, it brings a close to Russian billionaire Roman Abramovich's near 20-year ownership of the football club. Well, joining us now is Bloomberg's David Hellier. David, I know this is very close to my heart because I'm a Chelsea supporter. What does this actually mean for the best club on earth? Of the hate mail I'm going to get.
Yeah, I mean, it's great news for Chelsea. It brings an end to 3 months of, crushing uncertainty for the football club.
So why are American investors actually so interested in the Premier League?
Americans see Premier League football as globally expansive, much more TV revenue than any other league in the football world, and the valuations are, although they look quite chunky, they're on something like 4 to 5 times revenues, whereas an American franchise could be up to 10 times to buy it, and there are very few for sale.
Yeah, so how, I mean, is the price too high? Like, what's your take on this, David? You've been following this right from the very beginning.
I actually think the price is about right. I mean, the price for the shares in Chelsea is 2.5 billion, and that is, I mean, Football Benchmark, which is a reputable, financial analyst, has estimated that Chelsea's worth about 2.2 billion euros. There's always going to be a premium involved when you buy a club like this. The 4.25 billion figure includes 1.75 billion of investment in the team going forward. So it's really the 2.5 we should look at.
Yeah. All right, David, thanks so much. David Hellier there, who covers everything football and sports for us at Bloomberg, and of course has had many scoops on Chelsea Football Club. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Glencore has admitted to more than a decade of bribery and market manipulation. The Swiss commodity trader will pay about $1.5 billion to settle probes in the US, UK and Brazil. Glencore units have agreed to plead guilty to charges including bribery, corruption and price manipulation. New Zealand's central bank has raised rates by 0.5 percentage point for a second straight meeting. The RBNZ lifted the official cash rate from 1.5 to 2% as expected by economists. The bank also raised its forecast for rates to peak at close to 4% in 2023 as it battles inflation. Bank of America is boosting pay for tens of thousands of US employees that earn less than $100,000 a year. Base salaries will climb as much as 7% for workers who have been with the firm since 2021 or earlier. The size of the raises, which start next month, will depend on time spent at the company. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, coming up, we're live back at the World Economic Forum this week. Of course, it's been a busy 3 days. We'll bring you great interviews. We'll bring you everything you want to know about inflation, banking. We'll be joined by the Standard Chartered Chairman, Jose Viñal. So miss that conversation. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA.
surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Talks in Frankfurt, more ECB Governing Council members say half-point hikes should be on the table, but President Christine Lagarde told me yesterday there's no rush.
I believe that gradualism is actually the way to go as long as inflation expectations are well anchored.
Yeah.
If we were in a situation where we anticipate de-anchoring, or if we had a surge in demand, that's a different story.
Inflation is out of control and investors are losing faith in the Fed's ability to fix it. That's according to Bill Ackman. We get Fed Minutes tonight. And don't miss our conversation with Jose Viñals, the chairman of Standard Chartered, and Julie Sweet, the chief executive of Accenture. Those are coming up shortly from Davos. So good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Day 3, it's certainly not dull. We've had huge panels and conversations on NATO, on security, on energy, on inflation, on the economy. And then today we continue also looking at Europe and possible more integration. Well, joining us now to put all of these pieces together and to talk about the cost of living and, of course, the crisis that we will face because of the energy transition and the war in Ukraine is Standard Chartered Chairman. He's Jose Viñals. Mr. Viñals, as always, thank you so much for coming on.
Thank you.
I don't know what the biggest concern you have right now, because it seems there are concerns from left, right, and center, and there's just not really a glimmer of hope apart from maybe, countries coming together. What do you worry about the most?
Well, I think that what I worry is about the accumulation of different critical issues, crises, not only for the global economy, but beyond. Of course, we have the macro crisis with the stagflation. We have the energy crisis. We have the food crisis coming in. We have the confidence crisis after the global security order has been shaken. We have the crisis in globalization because there is now further fragmentation in the global order of trade and capital flows. And there are also some cracks in global governance because the West is united, but the world is divided.
I mean, this could be a perfect storm for the world economy.
It is a bit of a perfect storm. And I think we've had big crises in the past, but coming from so different dimensions, this may be quite unique.
So is there a danger that politicians and policymakers get distracted and miss the big picture of taking care of the ones that have the least?
Well, I hope not, but when one focuses on its own domestic priorities, it may be that there is a lack of international action. I think that we have seen positive signs, though, in the way that Europe and the United States and other Western economies have come together in this situation. But I think that there are many other issues where we need more working together rather than more dispersion. And I'm particularly worried about further fractures in globalization. I think that's something that worries me a lot. Yeah.
So do you see supply chains actually moving? So people reestablishing, and how much inflationary is that?
Yeah. Well, supply chains are moving from just in time to just in case, meaning that you do not only have efficiency considerations but also resilience considerations. That's something which is likely to lead to higher prices. And I think I worry even more about the reshoring and the onshoring, because this is something which runs contrary to the logic of a global economy. And I can understand that from some political points of view, from security points of view, but I think the world would be much better served if one tries to get diversification of global supply chains in order to get the resilience that we all seek.
But what needs to happen for that to actually continue that way? Because we're also seeing, more than a fracturing. It's really almost the world split in two right now.
Yeah, I think there are things that need to happen from the public sector and the private sector. I think the public sector should not put in place policies that actively incentivize the reshoring. It may be okay for a couple of strategic sectors, but I don't think
semiconductors?
Semiconductors would be one case, but I think this is something that should not go across the board, because I think it is back to protectionism. And I think the private sector can do a lot also in order to make sure that supply chains become more secure, more transparent, and more resilient. And I think that the digitalization, for example, of trade and global supply chains, and making these global supply chains more sustainable, is something that will go in the positive direction. We're going to have the WTO having the ministerial confidence, and I think that this is an area where policy should be discussed.
What's the role of banks in all this crisis? Is there anything that actually your bank and other banks can do to alleviate the crisis?
Well, yes. I think that fortunately in this crisis, banks were part of the solution rather than part of a problem. And we have been very close to our clients, trying to help them, clients both in emerging markets and developing economies and advanced economies. And for example, we have been helping clients to carry out the diversification of their supply chains in terms of different international corridors. And to give you an example, from Northern Asia into Southern Asia, in the first quarter of the year, our income coming from that corridor has gone up by 35%. So this is something which is good for our clients. We're helping them navigate these difficult circumstances, and there is a business opportunity.
But this is through loans, or is it what kind of support can you give for the economic transition, or is it actually helping just with finding the funds to be able, that they can electrify their economies and businesses?
Well, we can finance the capital flows which are needed and the reallocations of production facilities which are needed to make global supply chains more resilient, for example. But beyond that, we are taking a very strong stand on resetting globalization and working with many partners, for example, to improve the access of small and medium-sized enterprises to global trade by providing them with the services that they need, with the trade financing that they need. And I think, again, the digitalization of trade is something that improves the access of small and medium-sized enterprises to global trade channels.
Do you think China wants globalization?
I think China has benefited enormously from globalization. I think the world has benefited enormously from globalization. I think that there are two camps, as I see it in the world: those who want to do away with globalization and those who want to perfect globalization to make it more inclusive, more sustainable, more resilient. Standard Chartered, as a global trade bank, is clearly on the second camp, and I hope that reason prevails over short-term political considerations.
Mr. Viñals, thank you so much, as always, for joining us. That was the Standard Chartered Chairman, Jose Viñals. Now, we're also just getting some breaking news out of Prudential. They have a new chief executive. Anil Wadhwani is now group chief executive. We'll see what it means for the share price, but for the moment, it's pretty much expected. I mean, we knew that actually the current chief executive was going to step down, and now we just have the nomination of someone to replace him. Coming up, don't miss our conversation with Julie Sweet, Chief Executive Officer of Accenture, live at the World Economic Forum in Davos. That's next, and this is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in Davos. Now, we're now joined by Julie Sweet, the chief executive of Accenture, as we go around various industry groups trying to figure out exactly some of the challenges and what they can do going forward. Julie, thank you for joining us. First of all, my fact of the day, I mean, this is incredible. How many employees do you have?
700,000, and thanks for having me.
700,000 employees, and how many did you add in the last 2 years?
200,000.
I mean, that's just incredible because there was so much demand.
There's been so much demand, and you know, the one constant right now, despite the backdrop of the economy, is that IT spending is core to the solutions of the day, whether it's, you know, cost pressures because of inflation, or the need to figure out new growth because of the, you know, the problems in the supply chain, or how to address sustainability.
So, I mean, I speak to recruiters about the job market, but you are the job market because you hired 200,000 people in the last 2 years. Have you had to pay them a lot? Do you see, you know, inflationary wage pressures because is it people that change jobs?
Absolutely, wage inflation is real, and paying market is absolutely critical. However, in a tight labor market, it's not all about money. That's table stakes.
Yeah.
You know, we have a philosophy. We say that when people come to Accenture, they need to feel like they're net better off. And that means not just financial security and a great career opportunity, but also things like mental wellness. And in fact, I got my 800 leaders, top 800 leaders together for the first time in 2 years. And the first agenda topic was not our great results or our future. It was about caring for our people and our leaders.
And is this, I mean, does this really make a difference? We were having a conversation before about, you know, people resigning, the great resignation. Do you think you've been able to scoop up a lot of that talent because you're focused on things that in the past were considered maybe softer?
I think it's partially what you would call softer, but it's really the philosophy of to win, you have to be able to access talent, and that's a lot about diversity. So we're already 47% women. We focus on diversity broadly. You have to have the right talent pools. 20% of our hiring in the entry-level hiring in the U.S. will be apprenticeships. Right. And so it's about access, and we're also a huge talent creator. So we spend $1 billion on training our people. And so that's both great for our current employees, but it's really attractive if you're going to join Accenture.
You're way too optimistic. I need to pour a bit of cold water on that. No, I'm kidding. What's tech spending like?
Well, tech spending today is 5% of the GDP. It'll be nearly 7% in 2030. And despite the recessionary concerns that we're all hearing about, we continue to see in the latest reports that tech spending will increase. And of course, there's a reason for it, right? The supply chain. What's the answer to the supply chain? It goes back to tech spending. We're working with a company today who has a lot of supply chain shocks, and we built an analytics platform so they have early warnings around, you know, their supply chain, and they can adjust, which they didn't have pre-pandemic. So tech is really a solution to many of the issues today.
I mean, there might be parts of the business or actually certain sectors that say, look, I'm worried about inflation. I have to pay my staff more. I'm worried about the future. I'm not IPOing. I'm not doing this. And so I'll cut down on tech spending. Is there parts of an industry that do that, or is it still, you know, all guns roaring ahead?
What we're seeing is that is the conversation. We need to cut our costs, but how do we automate more, right? How do we cut out redundancies, particularly in the supply chain? We worked with a South American oil and gas company that wanted to decrease efficiencies, and they're doing it by actually cutting energy consumption using data. So they're saving money, saving energy usage, and decreasing carbonization. And that is a very common theme, particularly with the energy crisis, is how do I use data and technology to automate and kind of meet all of those goals, sustainability and costs?
It's a complex world. Are chief executives more worried about those data centers or cybersecurity?
I think it's both, really. The move to the cloud is actually more secure than on-prem and having their own data centers. And of course, if you're not in the cloud, you can't access data, and it's a pretty simple formula. The leading companies, they need to be in the cloud, they use their data, and then add AI to differentiate. And that is the winning formula today.
What are banks focusing on? So again, there's multiple complex issues that they're dealing with. Where do they decide to put their dollars?
Interestingly, two big themes there. One is the continued technology transformation so that they're tapping new markets. BBVA is a great leader in that, around core banking, digital sales, really an amazing example of compressed transformation, basically transforming a lot. But the other theme is sustainability. And I think it's really exciting, particularly here as the World Economic Forum, is the conversations around having a greener portfolio and a better way to run the banks. And so those two things are coexisting.
I know we talk about it, but the problem is greenwashing. When you look at the data, unless there's something, a real taxonomy, it's going to be difficult for banks to convince that they're doing the right thing across the board.
Well, I think, though, you're going to see that, based on what we're seeing with clients, that the whole myth around either greenwashing or that there's a trade-off between business success and societal benefits is actually being blown up, because if you use technology and embed sustainability at the same time, which is what we're seeing the banks doing, you can actually achieve both. And you're also seeing banks, for example, Barclays was talking recently about how they're giving home mortgages for more energy efficiency.
Right.
And so you're seeing banks help that transition as well.
Talk to me about fintechs. Are big banks going to be left behind because you have these exciting new propositions? They're more nimble, they're only mobile, and what can big banks do about it?
Well, you're seeing a lot of big banks start their own digital banks. And so Mizuho Bank is a great example of that in Japan. And so what we see is the financial services industry is doing what other industries is, how do you yourself become an innovator and how do you partner?
Yeah, the most difficult question in the world. Thank you, Julie, for joining us. Julie Sweet, they're the chief executive of Accenture with 700,000 employees. I'm not going to forget that. This is like my fact of the week. Coming up, we'll be speaking to Stéphane Bancel. He's the chief executive officer of Moderna. That conversation live here at the World Economic Forum in Davos. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
A what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, to the war in Ukraine, and NATO's Secretary General has called on Russia to lift its blockade of the port of Odessa and to end its senseless war. Well, Jens Stoltenberg was speaking alongside European leaders at a WEF panel on EU security.
It's actually the European public that looks at us and that says, please, for those big challenges, we know that the nation state on its own cannot do it. Please do it as European Union. Healthcare was not exactly European competence. Energy isn't really as well, and defense isn't really either. The public demands from us more integration. And yes, so there's more demands of how much we should do, but if we do it as in an integrated way, we can do it in a more efficient way, and we can do more.
The Minister, and then I have many questions for you, Secretary General, also from the audience, so I'll get to that in a second.
Just briefly, I think, yes, we are increasing our budgets for defense, and that is also, you have to prioritize. You cannot do everything at the same time. But I think it's not only about defense. That's not only about having military at our borders. It's also about our freedom. It's about rule of law. It's about democracy. It's what we all stand for. So that's why I think we all feel it's important to do it, but to do it in a smart way, as Prime Minister of Belgium is just stated. And I think also you have to look at the future. So at the same time, with climate change, with the importance of having a well-educated population in our countries. And these are the choices that you have to make. And sometimes it means raising taxes, being smart, because we also have our budgetary rules, and they apply to all of us in the European Union, at least.
Thank you. I have many questions for the Secretary General, so we'll start off a bit rapid fire. This one is it time now for a naval coalition of NATO states to secure a free and open Black Sea by escorting vessels from Odessa to supply grain to the global south?
It's first and foremost time for President Putin to lift the blockade of Odessa and other Ukrainian ports to allow grain to be exported out of Ukraine, because this is really his responsibility. The war is causing the food shortage and the increasing prices. It's not NATO or EU sanctions. It's actually the direct consequence of the war and the Russian blockade. Then I welcome efforts by EU, by NATO member states and others to try to find a way to get more grain out of Ukraine by rail, on land, and also the efforts that are addressing, is it possible to get it out on ships? That is a difficult task. It's not an easy way forward. The best and easiest way is to end the war, to drop the blockade and let the food go out. Let me add one more thing. And this is a war in Ukraine that affects the whole of Europe, but that it has global consequences. The increasing energy prices, and food prices affects everyone and the poorest people of the world. It just makes the whole war, the Russian invasion, even more senseless.
That was the NATO Secretary General Jens Stoltenberg speaking at the World Economic Forum with the Belgian Prime Minister and the Defense Minister of the Netherlands. Now let's get to another conversation from Davos. The IMF First Deputy Managing Director Gita Gopinath says global food inflation is a major concern and will likely continue to go up. Bloomberg's Tom Keene and Lisa Bramford spoke to her here in Davos.
Tom, this is a major concern for us. I mean, it's not just India, but if you look at food exports, since the start of the war, around 20 countries have put restrictions on food exports, be it wheat or be it palm oil and many other such products. And fertilizers also are in serious shortage. So we worry a lot about what's going to happen with food prices. I think it's one of those prices where there's probably more that's going to go up in the future than what we've already seen. And it is a major concern.
The history here is a domestic government will come to the rescue
flatten prices like the cost of bread in Egypt has been flat for decades and subsidize whatever the commodity is until it breaks. How close in your study, country to country, are we to a breaking point of that domestic subsidy to feed people?
Look, after 2 years of the pandemic, governments around the world, especially in countries like Egypt, do not have the fiscal space to provide widespread support. And this is something that we are tracking very closely, exactly this question of how many countries are now facing these rapid increase in import prices and therefore are likely to have balance of payments problems. This is one of the trackers that we have. And it is a major concern.
How much is this a failing, frankly, of the developed world from supporting Ukraine more? In other words, from actually providing more financial aid in order to get some of those supplies to the rest of the world?
You know, this is a very challenging issue about how to get Ukraine's supply out of Ukraine. The problem is the embargo on the Black Sea. I mean, you just cannot get the ships to take the wheat out. Thinking of creative solutions in terms of putting them on trains and sending them out through that way, but that's going to take a lot more time. In addition to the war, we're also seeing the effects of climate change around the world, and one of the reasons why India has put its export restrictions on wheat is because of poor yields and bad weather. So that's another big negative. But we really do need to try very hard at this point to try and get supply up as much as possible around the world.
The IMF First Deputy Managing Director Geeta Gopinath talking about the vital issue on food inflation. Well, plenty more from Davos throughout the day. In the meantime, this is what the markets are doing. A lot of the focus certainly on inflation, a lot of the focus on what we have from the Fed a little bit later on. Markets on a path to a bit more normality after an ugly day yesterday. We're seeing across the board gains, not only in Europe, but also in the US. Treasury yields stabilizing after a pretty sharp retreat, as again, the markets are trying to reassess or assess the outlook for Federal Reserve monetary tightening, the dollar pushing higher. We'll have plenty more, of course, from Davos throughout the day, but now Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Katie Lyons in New York, or Anna Edwards in London, and this is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We think of this as a monetary inflation. We think we're in a monetary inflation.
Are they worried about inflation? Yeah, because every time they open a paper, the paper says worry about inflation.
I don't think we're facing it into recession. Not as rapid growth as we might have hoped for, certainly. But, you know, who knows, and we can't take that for granted.
There are headwinds. Absolutely. There are many downside risks.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, May 25th. Our top stories today. Massacre at a Texas elementary school. At least 19 children are shot and killed. President Biden demands the U.S. stands up to gun makers. Russia is one step closer to default as the U.S. Treasury allows a key sanctions waiver to expire. U.S. banks and individuals are now barred from accepting bond payments from Russia's government. And economists say China's almost certain to miss its growth target by a large margin for the first time ever as Beijing's strict COVID-0 policy hammers the economy. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And the global growth story, very much the conversation when it comes to those on the slopes of Davos, Kaylee. Modest gains being made here on European equity markets. I imagine many in the US waking up, though, with their thoughts elsewhere after what happened in Texas yesterday.
Yeah, absolutely, and especially those parents waking up, getting ready to send their children to school. Of course, all of our thoughts are with those families in Texas. Our thoughts also, as you say, are with global growth. That has been a story very prevalent in China for weeks now as it continues to grapple with its COVID-0 policy and monetary and fiscal responses that there's questions around how much they can actually offset that negative growth impact. Nonetheless, it was a mostly up day in Asia overnight. The MSCI Asia Pacific Index up essentially flat, up about 0.1%, but Chinese equities were indeed higher, up about 0.6%. Now, the other story out of the Asia-Pacific region that we were monitoring overnight was in New Zealand. The RBNZ hiking rates 50 basis points plus, signaling that the path forward is going to be more hawkish than previously thought. Rates getting up to 3.95% by the end of 2023. So that more hawkish outlook really showing up in the short end of the New Zealand bond market, that 2-year yield up 2 basis points to 3.25. And the New Zealand dollar, the Kiwi, one of the only G10 currencies stronger against the US dollar today, Matt. It's trading right around 64 cents.
All right, very interesting stuff there. And in terms of markets, we've had a little bit of a roller coaster action already this morning. It's no longer buy the dip. Now it's sell the rip. We had futures up, and now they're down. Just 0.1%, but the move is about 1% in the last hour or so. U.S. 10-year yields coming down as investors now buy that debt. We have 274, which is in line with what we saw yesterday. So not really a lot of movement in the last 24 hours for yields, but we have seen them come down dramatically from 3% last week. NYMEX crude up 1% at 110.91. It's been hovering around the 110 level as well, so not a heck of a lot of movement movement there and almost nothing on Bitcoin, 29,762. So it looks like this market really has to assess how it feels about growth. It doesn't look like traders are making really big decisions right now because we're just doing a whole lot of nothing, I guess, waiting for the open. Anna, what do you see in Europe?
Yeah, a whole lot of nothing here, essentially, as well, Matt. Really assessing where we are on the inflation story, on the inflation fight, and then the growth implications of that fight. That's the big question hanging over markets these days, isn't it? We see that in bond markets, those moves up we see in those yields, and then that demand for sovereign debt that steps in. So this is what we see on European equity markets right now. It's a pretty mixed picture, a fairly flat picture, with just the right side of the flat line. If you are long of these markets, of course, up by 0.3% on the UK market. Some of that comes down to basic resource stocks and also to equity and also to energy stocks, sorry. So I can show you that we've got the energy sector moving higher, the basic resource sector moving higher. Here's basic resources up by 1.9%. The euro is interesting. We tracked it higher yesterday. We showed it to you yesterday. It was moving higher in session, now down at 106, down by 0.6% for the euro. Yesterday, the moves higher on the back of Christine Lagarde setting out her expectations for rate hikes. That was then followed by a lot of hawkish voices saying, can't we move faster? Today was the day for the doves to speak out. We've heard a few cautious voices saying, hang on, let's be a little gradual here and see what happens with growth. Drax Group, this is another story hanging over from yesterday. Yesterday, we talked about Drax and SSE and Centrica, these power-generating businesses in the UK that dropped on the threat of a windfall tax to pay for the cost of living crisis here in the UK. Well, we see reports in the other direction from other media, I should say, that are suggesting that maybe those taxes won't be applied to these businesses, and so we see Drax and others regaining some of that lost ground from yesterday. And Matt and Kaylee, this one I put in just to cheer everybody up this morning, Pets at Home. And because we were talking about Petco, Matt, yesterday as well, this stock up by 8.7%. It seems that despite everything, despite inflation, we are still very happy to go out and spend a lot of money on our pets.
As usual.
Yeah, can definitely say that is true for me and my 8-month-old silver lab, Anna. Now let's take a look at what is ahead today. Twitter will be holding its annual general meeting at 1 p.m. New York time, where investors are expected to ask questions about that pending transaction with Elon Musk. Then G7 energy and environment ministers are set to start a 3-day meeting in Berlin. And finally, 2 p.m. Eastern time, the Fed minutes will be released here in New York. We'll look to see what clues we get out of the FOMC, Matt.
All right, we will definitely be watching that very closely, but one of the things that is sort of occupying our focus this morning is a terrible story, the deadliest school shooting in almost a decade. A teenage gunman opened fire at an elementary school in Texas, killing at least 19 children, as well as 2 adults. A number of others were wounded. The gunman was then shot and killed by law enforcement. President Biden spoke after the attack.
As a nation, we have to ask, when in God's name are we going to stand up to the gun lobby?
Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from Washington, D.C. What do we expect the ramifications of this to be politically, Anne-Marie?
Good morning, Matt. Yeah, you don't think this story can get worse, but for me, I went to bed and actually woke up, and the death count of 2nd, 3rd, and 4th graders actually rose by the time I got out of bed this morning. Politically, we've been here before. This is the deadliest mass shooting of an elementary school since Sandy Hook in 2012, and there has been pushes in Congress, a very angry America pushing for gun legislation, but it has been blocked by Republicans. And the issue they have right now is, of course, that the Senate is divided 50-50. The House last March passed legislation that would expand background checks, 2 bills that would expand background checks before being able to buy certain guns at gun shows and online, and yet that has not been able to move in the Senate. Politically, it depends what this could mean for the November midterm elections. That really comes to mind. If this is something that can galvanize people to put lawmakers in place that would want to move on this kind of legislation.
On the subject of those midterms, Anne-Marie, obviously we had primaries in a number of states yesterday, and in Georgia, Trump-backed candidates ended up losing. What signal does that send?
Yeah, Governor Kemp not just winning, but really winning over Trump backs Purdue. This was really a mixed bag so far when you look across the United States on the primaries. But this really just shows that Trump's handpicked choice was not able to turn it out. And this one is very interesting because Kemp has been the governor that has said that the 2020 election results were fair. And Trump has constantly campaigned against this individual, and he won big last night, so he's going to be running off against Stacey Abrams. So, it remains to be seen because we need to get a lot of other results in place, but it does seem that at least in Georgia, Trump is really losing his hold.
Anne-Marie, thanks very much. Bloomberg's Anne-Marie Hordern joining us there from Washington. Back to the market stories now, and Russia is edging closer to a potential default. That's after the U.S. Treasury Department let a key sanctions waiver that had been benefiting American investors. They let it expire. Let's get more with Bloomberg's Danny Berger, who's with us. So Russia gets closer and closer to default, it seems, Danny.
Exactly. So this license that had been enforced since the first round of sanctions allowed U.S. banks to bring in dollar-denominated bond payments from Russia. So it was let expire on midnight as of midnight New York time this morning. And that will make, of course, it really difficult for Russia to service debt for those holding it in the U.S. Again, as you say, pushing them closer to default. A few to-be sures here. To be sure, we did have them start to step up payments in anticipation that come today they would no longer be able to do this. And there's a lot of European debt holders, so Russia might find a way to pay them and perhaps avoid default if enough of that money is paid out, save for that for the U.S. Now, they do have about $1 billion in coupons due through the end of 2022. And if this is a way to really hammer down on the Russian economy, one thing that shows that perhaps it's not having that impact is the ruble. The ruble barely moved on this news. Now, it is a lot of capital controls in this market, so there are a lot of questions to how accurate it is. But one thing that has been happening is this huge trade surplus in Russia. Money has just been pouring in because of the sale of commodities. You get the ruble hitting the strongest in quite a few years, and sort of adding insult to injury, almost on the day that this license expires, pushing Russia towards a default, they announced that they're having an emergency central bank meeting, the purpose of which is to talk about and combat this very, very strong ruble. They haven't said their options, but many think it will indeed be a rate cut, Anna.
Yeah, we often talk about the commodities exports of oil and gas, but also on the food crisis. Yeah. We had a story just yesterday saying that Russia is winning from the global food crisis that it helped to create, something no doubt we will return to reporting on. Danny, thanks very much. Danny Berger with the latest on Russia there. Let's pivot to China, and China is all but certain to miss its economic growth target by a large margin for the first time ever this year, as the country's COVID-0 policy hammers the economy. Bloomberg's Tom McKenzie has the details. And Tom, we talked just yesterday about a couple of banks taking down their forecasts for growth in China. Now we have this kind of consensus emerging that these targets will be missed.
Yeah, so this is a Bloomberg survey. The median forecast is for 4.5% growth out of China for this year. The target the government set themselves is about 5.5%. So obviously a substantial miss. Bloomberg Economics actually see growth falling as low as 2%, the first time that the US will outpace, according to Bloomberg Economics, China since about the 1970s. So again, it just underscores the concerns about the impacts of COVID-0 and the utility or not of announcing new policy measures when so much of the country remains in restrictive territory, lockdowns in Shanghai and restrictions in places like Beijing. So what do? Well, they could fudge the numbers. Goldman Sachs saying you could smooth over the statistics and maybe increase GDP by about 1%. Of course, there's been long-running concerns about the veracity of Chinese data. But in this case, Goldman Sachs says the hit from COVID is so big that they probably won't be able to do that. Or they just downplay this target. And certainly they haven't mentioned it since March. But just to underscore the concerns in, of course, just to reiterate, an important, very important political year for Xi Jinping as he seeks to get a third term. The front pages of some of the biggest state-run newspapers hailing Xi Jinping's economic advantages, economic successes in the media today, in Chinese media, and pointing as well to a magnificent and bright future for the Chinese economy. Well, when I speak to people on the ground in China, that bright future, that magnificent future seems a very, very long way away at this point.
The interesting thing to me, Tom, is that they let these numbers see the light of day. I mean, we always assumed previously that you had to take Chinese economic figures with a massive grain of salt, or many. And at this point, especially for Xi Jinping, to allow this kind of information to get out doesn't fit that narrative.
It doesn't. The most recent data, official data, does tally with some of the high-frequency data that economists look at, suggesting that they haven't been fudging those numbers at least. And in the last few years, you have had economists within China saying, look, let's downplay the target. In fact, some economists in China have said, let's just drop the target altogether. Others push back saying it's important because it motivates officials at the local level to achieve certain targets. But it is less important than it once was, still significant, and many officials and cadres will be judged on their economic performance. Xi Jinping himself may be being judged as well as he leads up to that third term, Matt.
Tom McKenzie, thanks very much. Covering all we need to know out of China. Now, Twitter holds its annual shareholder meeting today where investors are expected to ask questions about Elon Musk's planned takeover of the country, what we thought was a planned takeover of the company. Let's get more at Bloomberg's Laura Wright. Laura?
Twitter marginally higher in pre-market trading. Yes, it's the AGM today. While there won't be a vote on Musk's proposed acquisition, the key question really is whether Elon Musk, the world's wealthiest person, will show up in person or virtually. Will he make any inflammatory comments? Remember, at present, Musk is still the social media platform's largest shareholder with a 9% stake. Now, the spread between Musk's offer price of $54.20 a share and where Twitter closed yesterday stands at $18. That's the widest since we learned of Musk's initial stake all the way back on April the 4th. Now, in various threads on Twitter, Elon Musk has indicated that if 25% of accounts on the platform are false, his offer should be 25% lower. And you could argue that the fallout from Snapchat yesterday bolsters Elon Musk's ambitions to lower the original offer price. So where do we stand on the deal at the moment? Well, according to advisors on both sides who are close to the deal, they are working diligently. So this crosses the line under the original format. But there are a couple of other scenarios at play here. A lower price is agreed between both parties, or either Musk or Twitter walk away with a $1 billion exit fee. Maybe another investor shows their interest, but that's unlikely given the platform is now synonymous with Elon Musk, or the offer becomes legally void. That's quite a tricky scenario to materialize. Elon Musk, for example, would have to show that something has materially changed. Now, Tesla has taken a huge hit throughout all of this, down some 40% year to date. Another tough close yesterday for the world's most valuable electric vehicle maker, in fact, pulling Elon Musk's wealth below $200 billion for the second time. It signals a lack of conviction. Pre-existing shareholders believe his pursuit of Twitter, that is. But as if to try and assuage that concern, Elon Musk tweeted last week he is only spending 5% of his time on this deal. I don't think the world is ready for when Elon Musk ramps up his energy levels. Will any of us be able to cope?
All right, Bloomberg's Laura Wright, thank you so much. Now let's get back to some of the other stocks moving, social media stocks moving in pre-market trading in the U.S., one of them being Snap, which of course was the big story of yesterday, had a more than 40% plunge, its worst day on record. The bleeding does not stop this morning. That stock down another 0.5% or so after its outlook cut of yesterday. A more positive story, though, for Nordstrom. It is, of course, a department store retailer. It actually was able to raise its outlook, really highlights the difference between the higher end and lower end consumer and their propensity to spend in the face of inflation. Nordstrom is up about 10% in early hours. And another big up move is Wendy's. Trian Fund Management, Nelson Peltz's fund, actually says it may be looking at buying this company. That stock up about 9% as a result, Anna.
Coming up on the program, more from Davos. We will speak to the Siemens Energy chairman, Joe Kaiser. He'll be live on the slopes with us. And Simon Freakley from Alex Partners, the CEO of that business, will be talking to the team in Davos. Plus, he was the go-to banker for the wealthiest Russians, bringing in billions for Credit Suisse. But now the money has come to a sudden standstill. Read more of today's Big Take story by typing NI Big Take into your terminal. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Actually, right now, my main concern is not the components. My main concern is that we don't follow up on the targets. I'm absolutely one that says a transition in energy takes probably 3 decades. So please don't slow down. Be ready to follow up.
That was the CEO of Vestas, the world's largest manufacturer of wind turbines, speaking to our own Francine Lacroix out of Davos. Francine joins us now with Joe Kaeser, chairman of Siemens Energy.
Yeah, thank you so much, Matt. And I am delighted, as always, to catch up with Joe, especially, Joe, since you're really at the heart of some of this transition. A lot of the people in Europe need to transition because of the dependency to Russian oil and gas. Germany really at the forefront of this. What industries will not be able to do it without a lot of pain?
Well, definitely, it's all those industries which need a lot of energy. Think about the chemical industry, all the basic materials like glass and steel, cement, those will be the most affected ones.
So what's the right way to help them?
Well, to set the priorities right. So I think the earlier those industries are in the value chain, for example, the chemical industry supplying the car industry and many other industries in the value chain, they need to have the biggest priorities. The ones, which we can do without for a while, need to have the lowest one. It's painful, but that's, what crisis management is all about, setting priorities.
Do subsidies help?
No, we need a good plan. Energy agenda is about a long-term plan, not about, every 4 years with a new government we do the next big thing. That's not working. Remember 2 years ago here in Davos, it was, who is the greenest of all time? Today, everybody talks about crisis, so neither one is right.
Joe, the problem is that you need about a 20-year plan to make the transition work. Do we have that time? Can we afford that time?
I think we can do it in 5 to 10 years. If we, get out the regulations, the bureaucracy, and all that stuff. If it takes 8 years to build a grid for 500 kilometers, we have a problem. We could build it technically in a year or a year and a quarter. But if you need 8 years, you have a problem. And so it is about the political will to set an agenda, even if it hurts some of the voting community going forward.
So you want what, deregulation, American style?
I wouldn't say American style. I think we do a thoughtful, sit together, make an agenda and say what's important for our country in the long term. And that's obviously is about the energy agenda. Then we listen to people and say, look, tell us what you think. But then we need to make a decision. Energy agenda, crisis management, building the next generation is not a basic democratic process. It's about leadership.
There's a lot of American investors watching us now. How can America, United States of America, actually help the Europe in this transition?
Well, first of all, if they help us contain the Russian-Ukrainian war, the United States is the only one power which can do that. And that's really important. And then the European Union needs to get together
and find a foreign economic policy on how it acts towards China and towards the United States. And then we need to get a policy on how to build or rebuild Europe.
Yeah. When you talk about renewables, there's a lot of people here in Europe that say, you know, this will save us the future. Not everything's working. I know you're having trouble with some of your wind turbines. What's the problem with wind?
Well, the issue currently on renewable and predominantly in the wind energy is that not a single of the big companies, neither Siemens Gamesa nor our bigger competitors, are making any money. So that means the profit pool of that industry is negative. So if a profit pool is negative, and this is so attractive, how come?
But why? Why is it so difficult? I know it's supply components. I know there's delays.
Yeah, the industry got caught flat-footed. First of all, on the cost inflation of the raw materials, but that's only temporary, 1-2 years. Second topic is the industry has gotten ahead of itself in terms of forward pricing. You know, it was 7 cents or 5 cents, and people say, well, if you want to build this, you need to have 3 cents. And people were jumping into that, trying to understand, well, time will tell, you're really going to find some savings along the way, and we didn't. Yeah. The fact of the matter was that actually through the inflation of the raw material prices, you know, it got the other way.
So are we too ambitious actually with trying to do this too fast?
We didn't think it through. You know, the energy transformation is about going from a sort of functionally okay conventional power supply to an all renewable one. Yeah. So you need to make a plan how you make that work. And the priority number one is the grid. It is the grid. It's not building more wind and more solar. It is about connecting the generation.
I mean, there are huge question marks also about hydrogen. When will you make hydrogen profitable?
Well, it depends on which one. You know, you have the so-called gray hydrogen, it's very profitable already. Linde, Praxair, others are very profitable, and they do hydrogen. Then there's the blue hydrogen, which basically does the CO2 extraction and put it back into the earth. Competitive, but complicated, because whenever that, you know, people want to put that into the ground through a well, but what happens is that comes back up. So environmentally complicated. The green hydrogen today, if you want to make that out of electricity, I think that's a bad idea. Right. You need to first serve the society with electricity. Once you're done with that, we should convert electricity into green hydrogen.
Joe, thank you so much. Very thoughtful in terms of the sequencing of all of this. Kaylee, back to you in New York.
All right, Bloomberg's Francine Lacqua, thank you so much. She, of course, joined by Joe Kaeser, chairman of Siemens Energy. And Francine will be back with us shortly with more from Davos. But Matt, I find this conversation around renewables so interesting because it's called a transition for a reason. You can't just snap your fingers and be in a green energy fueled economy. And especially when we talk about sources like solar and wind, the sun doesn't always shine, the wind doesn't always blow. So you need to be able to solve that intermittency issue. And that's going to take some time.
Yeah, and I think it's doubly interesting in Europe, especially in Germany, where they've decided to phase out nuclear energy completely, which provided so much clean energy, and now they're having to rely on pretty much the dirtiest source of their lignite coal.
Yeah, and meanwhile, the piles of LNG keep piling up, stocking up here in the UK, where we have lots of LNG terminals, can't use it all at the moment, but also don't have quite the capacity to send it all to Europe where they could use it. So interesting dynamics to think about in energy markets. More from Davos when we return. Simon Freakley, AlixPartners CEO, will be with Francine. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question. That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. It's the deadliest school shooting in almost a decade. A teenage gunman opened fire at an elementary school in Uvalde, Texas, killing at least 19 children and 2 adults. President Biden demanded action to curb the violence, but gun control legislation has stalled on Capitol Hill. Russia is one step closer to default as the U.S. Treasury allows a key sanctions waiver to expire. U.S. banks and individuals are now barred from accepting bond payments from Russia's government. And China is almost certain to miss its growth target by a large margin for the first time ever. Beijing's strict COVID-0 policy has hammered the economy. Economists' median forecast for Chinese growth this year has dropped to 4.5%, a full percentage point below the official Chinese target. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Matt, global growth continues to be the topic of conversation really when it comes to Davos and elsewhere. Markets not moving a great deal though this morning. I guess we've got Fed minutes later on.
Yeah, absolutely. So maybe traders are waiting to see the Fed minutes, and actually it does look like from money market funds that the pricing in of rate cuts has come down a bit. We had been expecting more like rate rises, more like 350 basis point rate rises. Now it's coming down closer to 2 over the next 3 meetings. The S&P futures not doing a lot right now, very little change, down about 0.2%. U.S. 10-year yield also very little changed at 273. We saw it at 274 a few minutes ago. So investors are buying those bonds and pushing the yield down. NYMEX crude continues to rise, so now a gain of 1.5% at 111.45. We saw it just 30 minutes ago at 110. So we're seeing some movement there as well, less so in Bitcoin. We've seen it hovering around this $30,000 mark, although it is on the downside of that mark. It has been for the past couple weeks right now at 29,670. Kaylee, what do you see in terms of the pre-market movers?
Well, of course, the action in pre-market isn't as dramatic today as it was yesterday when we saw Snap and other social media stocks absolutely decimated after Snap cut its outlook for profit and revenue, warned about a deteriorating macroeconomic environment, and as a result, advertising headwinds. This morning, though, much more muted action. Snap is actually gaining a little bit of that 40-something% loss of yesterday back. It's up about 0.6% in early hours, so really nothing to sneeze at. You are seeing some bigger moves, though, for the likes of Nordstrom, of course, a department store retailer. It reported after the bell yesterday, actually raised its outlook. Stands really in stark contrast to what we heard from Target, Walmart, retailers that cater to the lower-end consumer. The higher-end consumer apparently still spending in the face of inflation, and that has a positive read-through to Nordstrom peers like Macy's, which is up about 2% before the bell. Finally, also making note of Wendy's. This is on news of a possible acquisition by Triumph Fund Management. That stock is up 11.5% in early hours, Anna.
Kaylee, here in Europe, a little bit of treading water going on, waiting for a little more clarity perhaps on the Fed. Those Fed minutes, as we've said, due out later on today. So stocks Europe 600 up by 0.3%. We still have energy stocks, basic resource stocks, rebounding from some of the losses that we saw yesterday. Of course, technology was really the heart of it yesterday, and media. The euro is retreating a little. Yesterday, we saw that move up. That was on the back of comments from Christine Lagarde and hawks at the ECB. Today, it was the turn of the doves. We had some more dovish lines coming out from Fabio Panetta, for example, talking about taking things gradually and being alert to downside risks. Drax Group, this is the power generation business here in the UK. Yesterday, these stocks in this sector, Drax Group and others, were really hit by reporting in other media that suggested there could be a windfall tax on those businesses. Today, we've seen some of that reporting dialed back a little bit, and as a result, these stocks rebound. Pets at home, Kaylee was just mentioning some of the spending that we were seeing on luxury names. Well, it seems we still find it within ourselves, despite inflation, Kaylee, to spend on our pets, and Pets at Home Group reporting strong numbers today, and the stock is up by just shy of 9%.
As I always tell my husband, Anna, the dog needs more toys. He chews through them pretty quickly, though. So really, we need to replace the toys pretty often. Of course, while we all are spending maybe on our pets, there is a broader question out there about how much consumers are going to be willing to spend in the face of higher prices. And as policymakers act to tame those higher prices, what is that going to mean for the growth outlook? Here's what some of our top Davos interviewees have said about the risk of a recession.
For the moment, we are not seeing a recession in the euro area.
But clearly the economy is starting to weaken. But it really, to me, comes down to inflation.
Supply shocks, demand shocks, all together mixed in one. Of course, it is unclear at this moment in time.
We may see prices even going higher, being much more volatile, and becoming a major risk for recession for the global economy.
I worry about a recession.
Eurozone and European Union will not go into recession. There will be a slowdown. But, you know, labour markets are so tight.
Right. There is now an increased risk of recession, but we do not anticipate a global recession.
Joining us now is Janet Mui, head of market analysis at Brewin Dolphin. All right, Janet, where do you come down on the risk of recession and the market's pricing of it?
Hi, good morning, Kelly. Well, our view is that, of course, growth is slowing is a pretty strong consensus now. But we do think that a recession this year is still unlikely. But I think the question should be how bad, if a recession is coming, how bad it is going to be, the duration of that, rather than if that will happen. Because we all know that every economic cycle ends with a recession. So in our view, we think that the recession wouldn't be too bad because consumer resilience is still there. I mean, households have saved up, and also a lot of the mortgages are fixed rates in the UK and the US. So that should shield the households from these pains of high interest rates. And of course, the labor market is very strong. And we do think that the high number of job openings should also help to absorb some of the laborers that may be laid off during a slowdown phase of the business cycle. So overall speaking, I mean, there is, of course, slowdown, but we're not too pessimistic.
So the unemployment rate, of course, clearly a bright spot still for the US economy. What should we look for in markets, Janet, as we see the Fed actually enact these rate hikes that have been priced in? What are you expecting to see there? Because if we get 50 and then we get another 50, if that is all priced in, should that cause downward movement, or will it allow stocks to recover and move on?
Yeah, we do think that the markets look a bit oversold at the moment. Clearly, the concern has shifted more from inflation to now the concern on the recession. I think markets are more and more pricing in that high possibility of a recession, right? We do think that a lot of interest rate increases are already reflected in the market pricing already, right? The interest rate future suggesting US rates could potentially reach almost 3% by the end of this year. And I think that's realistically the max that they can get to this year. So I do think that if the economy starts to slow a little bit, and inflation, of course, peaking and more signs of that slowing down, then I think the narrative of the Fed can turn slightly less hawkish by the end of this year. And I do think that the sell-off has been a bit too harsh, so that could be some more stabilization from here onwards.
Yeah, what do you make of the inflation expectations picture at the moment, Janet? It does seem to have stabilized and, in fact, coming back a little, perhaps reflecting the fact that a lot of people are talking about peak inflation in the US and that point having been passed. We'll wait to see if that happens. What does that mean for investment, though? What does it mean for treasuries, for example?
Yeah, absolutely. I was on the program, I think, last month talking to you about that, and you asked me about inflation expectation as well. Well, we did believe that inflation expectation has peaked. Well, you can see that pretty clear in the U.S. break-even rates. And we actually have reduced our inflation-linked bonds exposure last month because we feel that the peak is coming, because oil prices are peaking and growth is slowing, and of course, markets are pricing in more aggressive rate hikes that naturally will lead to slower prices going forward. So there's a lack of catalyst of how more inflation can go from here. And I also think that bond yields it has come back off quite sharply recently, and that consolidation can still happen because we're talking about potential high risk of a recession, markets are concerned, and peak in inflation, et cetera, et cetera. So I do think that, in the near term, wouldn't be surprised if bond yields can go slightly lower from here.
We've seen, Janet, equity, well, the S&P 500 at one point intraday was off 20%. Now it's down 17.3% year to date. And we've seen PEs come down below 20, back to more normal historical levels. But we haven't really seen capitulation, right? I mean, the VIX, I think the highest it got was like 32. Do we need to see it at like 40 or 50 before we can go back in?
Yeah, I do think, at this point, we do think the markets are priced in a lot of risk already. I mean, intraday, that S&P 500 did pay into the bear market suggests to us that it is increasing, pricing in the risk of a recession. I think in the near term, it's a bit oversold, given that the economic resilience is still there at the moment. And also, we think that with bond yields coming off a little bit, that should help with a bit of relief as well. But of course, markets are very concerned. So that's why we wouldn't rule out near-term volatility, and we can never put a time on when the market may bottom. But we do think that markets are pretty oversold.
So you can't time the absolute bottom, is what you're saying. But if you had cash to invest right now, would you put it in equities?
Yeah, I think a gradual deployment could make sense, given that valuations, as you mentioned, have returned actually to pretty much more normal levels, right? The U.S. Forward PE earnings have returned to more like a 10-year average. So that is starting to look attractive. So if you're long-term investors, you know that, in the future, you're going to see market recover and you'll see more substantial gains if you buy at current levels, right? So I think maybe a gradual deployment in capital could make sense in this environment, given we never know where's the bottom.
Janet, thanks very much. Janet Mui, thanks for joining us from Brewin Dolphin. Coming up on this program, more coverage from our team on the ground in Davos. We will speak with the Eurasia Group President Ian Bremmer, Cisco CEO Chuck Robbins, and Guggenheim CIO Scott Minerd. All of those conversations coming to you throughout the day. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance Early Edition. We are simulcast on Bloomberg Radio, on Bloomberg Television. I'm Matt Miller with Kayleigh Lyons in New York and Anna Edwards out of London. Now, Bloomberg's markets correspondent, Kriti Gupta, joins us now with her chart of the day. We've been getting these so early.
I know.
It's exciting.
Do you like
I
them?
used to have to wait till the afternoon. Of course I like them. I'm subscribed.
As everyone else should be.
Yes.
Viewers and listeners. Let's get to today's chart of the day, though. Put option volume. This is like a chart that a lot of people like to look at. You look at the put call volume to see where the options traders are kind of hedging their bets. But if you actually look at it right now, you've gone back to neutral. So basically, we're looking here for a radio audience at put option volume relative to call option volume. Essentially, bearish bets on the stock market relative to those bullish bets. And right now, they're hovering around a 1 ratio. And this is important because if it goes higher than 1, it means there's this kind of bearish bias in the market. If it goes below 1, there is a bullish bias.
So you're
in the
telling me
market.
right now, essentially, there's just no conviction.
I'm saying
Exactly.
right. Exactly.
We're not moving the ball forward at all, Kriti.
Well, that's the point, that a lot of this kind of, because you have seen this upward movement year to date, that going more towards that higher on that 1 ratio. So that means that people have clearly gotten bearish, as we've seen with the red on the screen year to date. But also keep in mind that once it hits that 1, a lot of people are just kind of shifting to neutral when it comes to their bets. I mean, Chris Murphy, I think at Susquehanna, put it best. He said, it's a buyer strike. This isn't panic selling. This isn't a liquidity crunch the way it was in March 2020. This is simply people saying, we're going to reevaluate and we're going to restart and kind of basically come back to zero.
Yeah, and Kriti, lots of people asking, you know, are we nearly there yet? Have we found the market bottom? And as you point out, there doesn't seem to be a lot of conviction either way on the chart that you just produced. We were talking in the break about a report at a credit site that talked about the rate of change in credit spreads and using that as an indicator of the market bottom. According to their research, 42 days, very specific, very precise, 42 days after you see this peak rate of change in credit spreads, that's when you tend to see the market bottom. I wonder what other clues people are looking for, though.
Well, I love that you brought up credit spreads because this is kind of the big mystery of the market. A lot of people look at, say, high yield credit spreads, for example, to see whether the credit market is going to break or whether the stock market is in fact right. And usually it's the bond market that's supposed to lead the stock market. And right now it seems the other way around, because if you look at it from a credit perspective, you don't see as many kind of warning signals or as many red flags in terms of credit spreads or high yield credit spreads specifically as you would traditionally when it comes to recession talk. So one of the arguments here, Anna, is that is the stock market perhaps over-anticipating some of those recession odds? At least that's one of the claims in the bull market. Some other metrics to look at is, of course, commodities, whether or not they're seen as risk rallies or inflation hedges. And I think, to me, the dollar is really the story here. A weaker dollar, what does that mean for the stock market?
Kriti, thanks very much. Bloomberg's Kriti Gupta with an update on the markets, of course. Coming up, we will be back with the team in Davos. Simon Freakley will hopefully be joining us, Alex Partners CEO. So we'll talk about the financial advisory market, M&A, and all in between. This is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Let's get back to Davos. Francine is there, Francine Lacroix, and she is joined by the CEO of Alex Partners. Fran.
Yeah, I'm delighted to be joined, of course, by Simon Freakley of Alex Partners. So much to talk about, Simon. The recession, is it coming, and what does it mean for businesses? How many will go under?
Well, whether we're technically heading for recession, I don't know. We're certainly heading for choppy waters. You know, the spike in energy prices, the spike in food prices, all of which gets passed on to the customer. I think we're heading for some challenging times.
Are there industries that you worry about more than others? You're a lead indicator because you do a lot of the debt restructurings.
Well, you know, we've come through COVID-19 with the biggest disruption of our lifetimes, and now, of course, we're into this humanitarian tragedy happening in Ukraine, another profound disruption. You know, the COVID-19 was a dress rehearsal for challenging times to come. Truthfully, I think it's going to affect every industry.
But in terms of where you're seeing the most stress, is it retail consumer? Is it something else? Is there a part of the business that you really worry about?
Certainly retail and consumer products are going to be affected because, of course, people's discretionary spend most manifests itself in those sectors. But what's happening in the energy sector, what's happening, of course, with the dual challenge of energy transition during a time in which we're trying to deal with the profound disruption to gas and oil supplies is going to put real pressure on those sectors.
How many zombie companies are in the UK right now? How difficult is it to estimate that?
Well, of course, the argument's always been that these companies, these zombie companies, can carry on going because interest rates are so low. Well, we're now in a raising interest rate environment. So I think that we will see a whole bunch of companies that have been hanging on by their fingernails, not being able to do so. How many, I don't know.
So should we look at also some of these stress pressures in the U.S.? We seem to underestimate the severe impact that actually all this cheap monetary policy has done for them as well.
Well, I think it was, I mean, politically, of course, there had to be federal support programs coming through COVID, but now we are in inflationary times. You know, the real economy does catch up. Interest rates are going to go up, so we are going to see the effect of that in all Western economies.
Simon, what are you here in Davos for? Do you like it? Do you think it's the beginning of the end for this World Economic Forum?
Well, it's a very different Davos, of course. That, you know, there's obviously the Russian and also the Chinese contingents aren't here, but there are fewer people. It's certainly easier to get around, but there is something missing. I don't know whether this is going to be regenerated in January or whether time has moved on. We've yet to see. But I think there is an awful lot of good debate on important subjects still going on.
So you're here not to listen to the sessions, I imagine, but actually to speak to clients and get business.
Well, we certainly speak to quite a few clients, but I am here to listen to some of the sessions. I went to an excellent debate last night on the metaverse. I'm going to a session today on criminal justice reform. There's some really excellent debate going on, but of course, the connections that are made and refreshed here are an important part of being here.
Is there a glimmer of hope anywhere? When you look at the world economy, when you look at world affairs, there's a crisis from crisis from crisis. Is there anything good that can come out of it?
Well, you know, I think that COVID-19 was a dress rehearsal for many disruptions that are yet to come. You know, we're obviously in the middle of the Ukraine crisis, but there are many disruptions happening in every geography and every industry. The medium to long-term view, I think, is still, one can be optimistic. In the short term, lots of challenges, but businesses have been very good at pivoting on the back of these challenges.
So what do we need to get right in the medium term to make sure that it's not a shipwreck longer term?
Well, I think looking at through the lens of business, what business leaders need to do is to make sure they stay agile with their strategies, to the extent possible have their cost structures in variable rates rather than fixed cost structures so they can pivot quickly, actually executing their strategy, even if it's not perfect, but doing it now is important, and just making sure that they develop their businesses on the back of changing circumstances.
Is it very difficult to execute plans where everyone's resigning in the Great Resignation?
Well, huge pressure in the labour markets, of course, but and of course shrinking labour markets in many of the Western economies. Attrition rates are up in all industries, so it is challenging. And for certain industries like restaurant and hospitality, it's critically challenging. But I think that in the medium term, I think there's a lot to hope for.
Okay, Simon, thank you so much. I mean, we talk about a lot to hope for, but it's difficult actually to see amidst all this, doom and gloom, where we see it next. Matt, I'm going to hand it back to you, New York.
Yeah, Francine, thanks very much. Bloomberg's Francine Lacqua there, sitting down with Simon Freakley of Alex Partners and pointing out that it is difficult to be optimistic. I want to get to what we're watching on that note, because Michael Burry has tweeted something cryptic, he did tweet this yesterday, but now I'm on Twitter and it's been deleted. Fortunately, people save these tweets, so here we have it.
You saved a copy.
Sorry?
You saved a copy.
No, well, Sarah Mazzulli saved a copy, our producer. Thank you, Sarah. And here it is. As I said about 2008, it's like watching a plane crash. It hurts, it is not fun, and I'm not smiling. Now, you have to suspect that he's talking about markets here. Of course, in 2008, he predicted the housing crash. Yesterday, we got housing news out of the U.S. that was far worse than expectations in terms of new home sales. We have had a red-hot housing market here, Anna, but obviously, as prices rise, there's no inventory, and now mortgage rates are going up. It seems that it could turn around.
Yeah, there's some sticker price shock happening in housing markets. Of course, Michael Burry of Big Short fame, as well as of Scion Asset Management. Let me tell you, I'm watching UK politics, Matt, which probably won't surprise you, because today we just heard already this morning, actually, that this civil servant called Sue Gray, you might not have heard of her outside of the UK. She was tasked with conducting a probe into these parties that took place during lockdown rules here at number 10 Downing Street and a few other places. She's concluded her investigation. The Prime Minister's already been fined by the Metropolitan Police for some of the parties, or for one in particular that he attended. So we'll see what kind of language she uses here, and whether Conservative Party MPs
my eye roll goes all the way across the frame. Like, isn't there more important stuff to work on in the UK than a cocktail party?
Well, that's exactly what the government will say, because in the aftermath of this, we might hear some news about help for those who are really being hit by the cost of living squeeze, by those who are going to be struggling to pay their energy bills. And that might be the way that the media timeline plays out, shall I put it like that. As soon as we hear the details of the Sue Gray report, which we should do today, look then for that to be followed by the government trying to reset the conversation with some help for those affected by the cost of living. That is it for the early edition. Surveillance in Davos is ahead. This is Bloomberg.
When you think space, you probably think, one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We happen to be in a very bad inflation situation that puts the Fed in a box.
The Fed and rates going up with slowing growth. That combination is pretty deadly.
When these growth stocks stop growing, it's a big problem.
Maybe in the near term we get a little pause because the Fed will probably follow the forward curve up. I think it's very important for the Fed to rein in inflation as soon as possible.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene from Davos, Switzerland, the World Economic Forum on a Wednesday, a somber moon in Davos. And Lisa, we stop, and we're going to go to Anne-Marie Horton here on Washington in a moment. A somber Davos, but far more a somber America.
A somber America after one of the most deadly shootings of a school in the nation's history. Yet another one. How many times do we have to do this? And I keep thinking, here we are talking about the big issues and how investors rearrange money. There's so much focus on the E. What about the S? What about the social aspects that have led to this kind of outcome?
Mariana Mazzucato was with me this morning on my panel here in Davos, folks. The arch progressive, someone who's challenged modern economic and social thinking, and she spoke of it and just said these repetitive processes are there and we're looking for the courage to finally fix it.
Yeah, 18 children have lost their lives as a result of this shooting, and one teacher, as well as the gunman. We are getting through the processes and the larger picture market still churning as they try to figure out what the road ahead is. A lot of pessimism here in Davos, just more broadly about the trajectory of the global economy. And you're seeing that reflected in a number of data points that came out yesterday that indicated a bit of softening, and you're seeing that pricing in on the margins.
I think you've taken the Kool-Aid here at Happy Valley. I thought at the end of our show yesterday that there was more than a bit of softening. The market's quieter today versus the festivities we saw as we ended surveillance in Davos yesterday. It's a calming, but I did note oil at $115 a barrel gets my attention.
Yeah, especially because the refined products are getting to such heights that they are crimping consumer ability to buy other things.
Jet fuel to get home?
Well, maybe we get to stay. That would be lovely. I honestly think, though, that we are looking at a situation that people are trying to game out and the potential social unrest stemming from higher gas and higher food prices. Coming up, we're going to have a host of incredible guests to talk about all of these things, including Dan Yergin. And I'm really keying into what he has to say. He's vice chair at S&P Global. Ian Bremmer is going to join, and honestly, he's got some fascinating things at Eurasia Group to say about COVID and the waves of it that are not going to make a dent in the U.S. and Europe that seem to have moved on, but this means China is going to be shut down for that much longer. And Karen Carniel-Tambour, co-chief investment officer of sustainable investing at Bridgewater Associates, how much does she focus on the S in the wake of what we just saw with those shootings? And Chuck Robbins, chief executive officer at Cisco.
A lineup today for, particularly looking forward to speaking with Dr. Jurgen about the commanding heights of Davos and again the somber mood. Last night, the Roosevelt Room in the White House was not built for this. They're most certain of that. It was built for diplomacy and for important government meetings. Last night, the President of the United States from his Roosevelt Room.
Where in God's name is our backbone to have the courage to deal with it and stand up to the lobbies? It's a time to turn this pain into action for every parent, for every citizen of this country.
Joe Biden from the Roosevelt Room last night. Anne-Marie Horton has been reporting on this through the evening and into the morning. Anne-Marie Horton, we've all seen this before. What will change in the East Room this afternoon?
Well, the president in the East Room is going to be talking about public safety and going to be signing a law about it. What will change, though, across America, Tom, is very little in the sense that we have been here before. This is the deadliest attack on a school since the Sandy Hook Elementary School shooting in 2012. There was Parkland, there was the Santa Fe, there's also mass shootings, Las Vegas, San Bernardino. There's so many, I almost can't even explain to you how many there's been. And while, there's lots of debate in America about the right to own guns, there is a public support about making sure that everyone goes through universal background checks. There has been legislation passed in the House to do this last March, over a year ago. The issue is they do not think they'll be able to get it through the Senate, given they'll need 60 votes and a split 50-50.
Anne-Marie, Texas has one of the loosest gun law regimes in the nation. Has there been any soul searching in some of those types of states that do have a pretty loose approach when it comes to gun rights laws?
Well, there are some states, I think it's about 9 or 12 of them, including the District of Columbia, that have these laws where, and a lot of, there's a bipartisan support, including from Senator Rubio, who brought this bill up, to have grants to push more states that individuals close to maybe someone who owns a gun, who they think is experiencing violent behavior, could get involved and take guns away. But a lot of individuals campaign on making sure that in these states, like Texas, that they have easier access to guns. And we should note that there actually is going to be an NRA convention this weekend in that very state of Texas.
Anne-Marie Horton, we spoke to the senator from South Dakota the other day, Mike Rounds, a former governor of the great state. He from Pierre, South Dakota. Before we went on, he and I were reminiscing about pheasant hunting trips to South Dakota. And you go out there with the romance of past guns of America, like, say, an Ithaca 12-gauge shotgun. That's not what we're talking about here. I don't know the list of guns used yesterday, but the answer is this is basically military hardware applied to the killing of children. Is there any discussion of the Senate of distinguishing between guns?
Well, this is also something that's been brought up a lot of times in the House alongside those universal background checks. This has, Tom, we've had a ban on some of these assault-style rifles in the past. There was loopholes, though, that gun rights advocates have said that manufacturers would tweak them slightly so then they would be able to get through. In the Senate, this is just not a discussion now. It's not. There's one thing that happened last night, which is Senator Schumer set up the legislative calendar to potentially bring that H.R. 8, that universal background check, even at gun shows, even online, to make sure that there are those background checks. And also another legislation, a bill that was passed in the House that would allow an expansion of how long the background check can go forward for. So meaning if it's not done in 3 days, the process of that gun and that transaction doesn't go through. You have to wait for the background check to be fulfilled. Right. So Senator Schumer is trying to push this through, but potentially it's just gonna be a political vote so that he makes sure that at this moment in history, in American history, where there is a lot of anger right now about gun violence, that senators are on the books, but it doesn't look at this moment that he has the senators to pass that.
Whatever your politics, our American disease. Amory Horton reporting on this through the morning, and again, we'll give full coverage with the president. And Elisa helped me this afternoon.
Yeah, I believe he's speaking at 4 p.m. and talking about safety. Perhaps there'll be more in color then.
I don't know anybody more qualified to take 30 seconds here to talk on this than a gentlewoman who is from the shores of Manhattan and spent a fair amount of time in the Dakotas. That would be you. What a divide.
There is an incredible cultural divide in America, and I will say that is actually a running tension here at Davos, where it's basically a celebration of capitalism and globalization at a time where a lot of nations are increasingly populist and actually moving away from that. How do you unite two views to have a discussion in a more moderate way?
We'll continue to monitor this story through the morning in New York, and of course for those of you around the world. Right now, David Riley joins us, Chief Investment Strategist at Blue Bay Asset Management, on the tumult in the markets. David, I've got to go to bonds and look at the price decline in bonds. There are those beginning to consider duration. They're beginning to consider the courage to acquire fixed income. Do you have that courage this morning?
I don't have the courage to go outright long in terms of sort of core fixed income. I mean, you're absolutely right, Tom, that I think one of the kind of very important shifts that we've seen in the market in recent weeks is that when risk assets sell off, then bonds have been rallying and yields have been falling. The reason why I think it's very hard to take a kind of big directional bet on rates right now is that we still do have inflation at very high levels. We have a lot of uncertainty as to what the path of that inflation will be, and I don't think we can really start anticipating as yet any kind of dovish rhetoric or potential pause, whether from the Fed or other central banks. And the level of volatility is such that I just don't think it makes sense to make big directional bets. There are some relative value opportunities, though.
Okay, so let's get into some of those relative value opportunities at a time. Would you really outline the uncertainty by a potential Fed funds rate that could be at 1.5% by the end of next year or north of 4%? What are the relative values that you see?
Yeah, I think, that highlights just the, extent of or the very wide distribution of growth and inflation outcomes. And because of that, I think we are going to continue to see very high levels of volatility. So where I think there's some relative value is, for example, between German bonds versus UK gilts. I think, the UK is in stagflation. It has a situation where not only is inflation very high and going double digits, but we also have a pickup in terms of both wage growth and inflation expectations. So I do actually think that there's some relative value to be had between, say, bonds and gilts, where I'm a bit more kind of bullish, if you like, on bonds. And in terms of within US rates, as I say, I'm pretty much neutral at the moment. I don't really want to take that bet. I think if we saw US rates, the 10-year, fall, another 20 basis points or so from where it is at the moment, then actually I think I would be inclined to actually go the other way and actually start rebuilding a sort of short position. But right now, I don't think you can kind of do that. Things like long duration investment grade credit, I think is quite an interesting place for investors to be right now.
Just quickly, David, what's your cash allocation at the moment?
The cash allocation is pretty high across most of our strategies. So, for example, in our multi-asset credit strategy, we're at about sort of 6%, which is generally higher than we would normally run. And that reflects a more kind of defensive risk positioning that we have a bias towards, given this macro uncertainty that we face.
David, I've got to ask about your assessment of the Bank of England. Each of these central banks right now have a certain character. Is the Bank of England on message?
No, I think the Bank of England is kind of quite confused. I mean, it does face, a particularly difficult set of circumstances. It has the highest inflation in the G7, which is set to move higher. And at the same time, there's the biggest hit for many, many years to UK household incomes coming from primarily higher energy prices, and the Bank of England has warned about lower or even a potential recession later. But I think the whole messaging is confusing. I think they need to address inflation. Right. They need to send that signal strongly, anchor inflation expectations. Otherwise, we could see quite a significant pressure on UK assets, particularly sterling.
David Riley, thank you so much. With Blue Bay Asset Management, Mr. Riley nails it, Lisa. I'm sorry, the messaging here at Davos is confused.
I think that that's accurate, especially given the parameters of potential risks here. And how do you nail that down? I think that's really emphasized by yesterday getting a few data points, including disappointing housing data, including ISM data. And suddenly people are thinking the Fed's going to back away.
And just to clarify this, I'm hearing from Adrian Mark there will be January meetings of the World Economic Forum in Davos. Where will the bond market be then?
What's the conversation going to be about? Is it going to still be about Ukraine and about oil? Is it going to be about China lockdowns? Where will we be?
The conversation may be, well, were we going to let them come back? Stay with us. A wonderful guest to join us, an annual visit from the Commanding Heights with Daniel Yergin. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
of May, the consumers spent 10% more than they did last May. That's over top of the payments that went out to pay taxes. So the consumer spending, and people say, well, it's inflation-driven, 8% more transactions.
Brian Moynihan, Bank of America Chief Executive Officer. I thought he was fired up talking about banking.
Yeah.
Lisa Bramlett, he loved it.
Yeah, and he was talking about how the consumer still looks strong, which is both a blessing and a curse for a Federal Reserve that has to parse through that strength. And what does it take to end it?
For all of you on American Wall Street, the repeat video we have of Mr. Moynihan, I really think is must watch, just to capture the spirit, the choice set that some of these big bankers have right now. We welcome all of you to Davos, Switzerland. A beautiful day here, the fog lifting. I just did a lamb and goat check. I think they're not there. They're in the barn.
I hear them bang occasionally. I think that they're a sheep.
They're there, and maybe they're going to come out after the torrential rain. Someone who has written about the torrential rain of the world landscape is Daniel Yergin. He is vice chairman at S&P Global. And yes, the price in oil, and yes, Brent crude's 115. But in this more somber Davos, we must speak to Daniel Yergin about the commanding heights that he codified a good 30 years ago. Daniel Yergin, in Commanding Heights, you spoke of the journey of communism. What is the journey of Putin?
Well, I think what we are really at an end of an era, and it's bracketed by Davos, because it was in Davos where you saw the opening up, the reconnection of what had been the Soviet Union and the Soviet satellites with the world economy in one global economy. That's now fragmenting. Of course, no Russians here, no Chinese here, and it's back to a more fragmented, less globalized world.
How much finger pointing has there been, both in conversations on and off the record that you've had at Germany, and the reluctance to move away from Russia in terms of their dependence on oil and gas?
Well, I even heard the German economics minister said it was a strategic mistake to what they've done for the last year and a half, a decade and a half rather, and that he said in a matter of weeks we've got to change that. So it really is a big change.
And meanwhile, going forward, do you get the sense that there is a cohesive plan to really move away and substitute those supplies, or do you think that that plan is still lacking?
I would say it's an uncohesive plan. I mean, Europe wants to, the EU wants to embargo Russian crude oil. They can't get Hungary on board, so they keep postponing it. But I think individual countries are going to cut back. And what Putin has done is he's basically, over the next 2 years, has undercut what is his baseload market, and that's why Russia's not going to be an energy superpower anymore.
Dr. Yergin, George Will, September 12th, 2001, wrote of our holiday from history is over. Robert Gates, esteemed by all in politics in Washington, has spoken of our holiday from history is over. And acclaimed infantry officer General Mark Kimmett says our holiday from history is over. You, more than anyone in the modern era, have written about this. If our holiday from history is over, what are we going to?
Well, I think we've moved from what I have called the WTO consensus, which is globalization, to great power competition.
Do you agree in deglobalization?
I think fragmented globalization is what we have. And it's the problem for companies, of course, multinationals. They've played by the playbook of globalization, but that playbook doesn't work anymore in a world that's fragmenting.
In Commanding Heights, you do a beautiful job of bouncing between the elites and the people. I remember Frog in the chapter on Brazil was just brilliant in this regard. A great theme here is the elites are disassociated from the broader middle class. Higher inflation, which crushes the middle class. You know the story and the drill. What's your prescription for institutions and elites to reconnect with their middle class?
Well, I don't think it's a simple thing. Obviously, inflation is so undercutting of society and builds so much anger. So I think that dealing with inflation, but you're dealing at a time when world energy is disrupted, food, and of course 70% of the cost of food is actually energy, processing and everything. So I think these are still going to be very much, I think it's a troubled period ahead, and you're going to see social instability as a result of this in countries.
Is it appropriate that China isn't here, given the fact that that economy has such a massive influence on whether we get a global recession?
Yeah, absolutely, but they're not here because of COVID and because you'd have to go back and quarantine. But you know, Russia, you understand, but the lack of China here is actually more significant.
and probably more of the reason why there is so much uncertainty. I was looking at a number of reports that game out, if we keep getting these waves of COVID, China remains in lockdown for longer, all of a sudden you have a very different parameter of risks in terms of the downside to growth. What's your view on this in terms of how much of a swing factor that will be?
Well, I think you see it because it once again means you get the supply chain problems again. That adds to the disruption, that adds to the inflation. So waves of COVID, if that is what continues to unfold, is in itself a deglobalizing factor in the world.
Learning here in Davos of the, I'm going to call it certification by the Philippine Congress of Mr. Marcos Jr. You may know the name from many years ago. Dan Yergin certainly does. Huge debate within Philippine society of his resounding win over Ms. Roberto and other candidates as well. And some would say, not me, but some would say this has an autocratic tendency, a return to autocracy, as maybe we see in Hungary. I'll let you suggest other nations. How does a liberal society fight against a trend of autocracy?
Well, I think it is. You can see it in a lot of countries. I mean, the most important thing is actually elections, that people, once people are in power for 8 or 10 years, you're in a different game. And we've seen that. Look what happened with Russia.
Well, look what happened with Russia, but we're all hinged on the Chinese Party Congress, where it's, I believe, Xi for life. I mean, is that an important meeting coming up in the late autumn?
A central meeting, because it will set the course for China for some time to come. And obviously, they're struggling with party control at the same time maintaining a vibrant economy.
Do you get the sense that the conversation around moving away from fossil fuels and oil in particular is taking on a new geopolitical significance at this Davos rather than just good wishes of people who want to do the right thing?
Yeah, I think it's cutting both ways, because it also means that there's much more concern about access to fossil fuels investment and the kind of preemptive underinvestment that there's been. So a lot of the discussions I've heard is actually you're going to need more investment resources, and you can't just count on a smooth path ahead. I think it's a bigger problem now. It's a more discordant discussion now than it's been in the past here.
Global Wall Street doesn't give a damn about international relations. None of them are at the commanding heights. JP Morgan's London desk models out $120, $150 Brent. Is that feasible?
I think you could have that happen. We see this market tightening right now, and if Chinese comes out of COVID and demand goes up, the pressure will be there. And the responses to that are going to be, there's going to be a political response, and there's going to be obviously a big economic response.
Yeah, but where does even gasoline prices go then with the refined goods, honestly?
Oh, listen to your gloom.
Well, no, I mean, honestly.
Like Brent crude.
I know, we're running out of time.
We're having not only a problem with crude oil, it's a problem with refining.
Right.
That's where the real problem is, and that's where diesel, gasoline, all those prices. And, you know, we had a global refining system, and that's been disrupted, too, by as a result of Putin.
We're out of time. With the new map, Dan Yergin with us, of course, of S&P Global. I can't say enough. It has aged well. A read of the commanding heights now would be important, and that would be also with the stuff Dr. Bremer's directing.
Yeah, right, exactly. It dovetails together.
I mentioned it today in my panel.
Oh, yeah.
Yeah, you know, the crowd went, oh.
Well, he's coming up.
Coming up on a G0 Davos, Ian Bremer will join us with Eurasia Group. Please stay with us. This is Bloomberg.
companies know they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
World leaders.
Good morning, everyone, from the World Economic Forum in Davos, their 51st year, and they've just told me, Adrian Mont, telling me there will be a January meeting here. They've really been chewing on it the last couple of days. Lisa Bramwitz and Tom King, John Farrow on assignment, and Lisa, it's odd in every way this year, but we're sort of mid-Davos this morning.
Mid-Davos or end Davos. I think everyone's pretty exhausted because it has been a working, it has been a working Davos, and that is what everybody says in terms of really trying to make the most of the proximity of all of these, both officials from governments as well as chief executive officers of companies.
And of course, the world news buttress, including really difficult news of the war in Ukraine this morning. On markets, quieter this morning. Let us go to New York. Here's Kaylee Lyons.
Yeah, Tom, quiet indeed. Really doesn't look like there's a lot of conviction out there. Futures positive, then negative, now positive again, but only fractionally, up about 2 points on S&P E-minis. And in the bond market, we go nowhere, unchanged on the 10-year yield, just shy of 275. Where you're seeing a little bit more action is in foreign exchange. The dollar weaker against all of its G10 peers this morning, including against the euro. 106.71 is where we trade on euro dollar. Beneath the surface of the equity market, there are some movers to pay attention to. Of course, the one of yesterday was Snap, a 40% record decline after cutting its outlook, warning on advertising. Just the smallest of rebounds taking place this morning, up 1% in early hours. It is a bigger move, though, for Nordstrom. This is a retailer actually raising its outlook, but of course it caters to the higher end consumer. Really goes to show you the contrast between those at the high end and the low end and their propensity to spend in the face of inflation. That stock is up nearly 10%. And Toll Brothers also higher by the better part of 4 percentage points. But this one is interesting because they actually cut their deliveries outlook for the full year. Executives warning of a moderation in demand after the unprecedented pace of the last 2 years, talking about higher mortgage rates, the macroeconomic environment more broadly, how that is weighing on housing. Really interesting to contrast that commentary with the data we got out of the U.S. yesterday, Tom.
Kaylee, thank you so much. Right now, this is a joy. Within the sphere of international relations, there can be vogues, there can be moments. And one of those moments was, I'm going to guess, 20 years ago, Fareed Zakaria with a post-American world. He says there is a revolutionary moment now, and a required read is Ian Bremmer's The Power of Crisis. Dr. Bremmer joins us this morning, of course, with Eurasia Group, of which we do an annual beginning of the year visit. I thought Fareed Zakaria was dead on about the moment we're in the power of crisis, except it's not crisis. I don't know what the plural is of crisis. You're the fan.
Crises.
The crises descend upon us, don't they?
Well, why are you shaking your head? That is the plural of crisis.
No, I know. It's just the really...
She has to deal with me on a daily basis.
So carry on,
The many
please.
crises we have now, which matters?
Well, Russia-Ukraine is the one that matters to everyone here. It's also the one that's least well understood, because for the last 3 months, the focus has been Ukraine. But of course, the confrontation is also between Russia and NATO. The potential for negotiations to bear fruit, virtually zero. It's the first time in history that we have forcibly decoupled a G20 economy from the world's advanced industrial economies. That is a very big deal, especially for a forum that traffics in globalization. It is purely because of the acts that Russia has taken. And this is, I mean, the fact of the matter is not just a Cold War between Russia and NATO, but there are elements of a hot war. So of course, people are rather disconcerted by that.
Ian, people are focused on that, but are they focused on the right thing? We were just speaking with Daniel Yergin just moments ago, and he said, frankly, the bigger news is that China is not here because of COVID, and that has a much more substantive impact on the global economy. Should we be more focused on a decoupling there?
No. Because we are not doing a significant decoupling there. I mean, look, yesterday, everyone was asking about the Biden-Taiwan statement, which was much ado about the exact same thing that he said a couple of times already, and that the White House backtracked. China, of course, is the most important rising power in the world, second largest economy. We're not taking any away from that. But the fact is that U.S.-China relations are very interdependent, and they are more stable, where Russia has just completely subverted a 30-year peace dividend that Europe has enjoyed. And I mean, I understand that I'm a New Yorker, but also we are in Europe. And so this is truly a generational change. That is what we should be focused on.
So how much is this an issue of supply chains, of food,
yes,
and issues with just what we're seeing in terms of a widening divide, if nothing else, in the quality of life between wealthy and the...
Oh my God, the number of times that I have heard from people in the last 3 months that, well, you're focused on Ukraine because it's white people, because it's Europeans, you don't care about Syria, you don't care about Afghanistan. There is a point to that argument, but the fact is that the poorest people in the world are going to be vastly more impacted by the Ukraine crisis than any of those other crises that have occurred for precisely the reason you just mentioned.
How much is this also an existential threat of the geopolitical order of Europe? And that's why I made the point, we're in Europe and people are focused on that. How much are people concerned about this trickling out into some sort of bigger challenge that is unanticipated?
Well, I mean, how much are they concerned that gas from Russia through Ukraine to Europe could be cut off at any moment by the Russians, by the Europeans, or by the Ukrainians, or by a non-state terrorist actor for that matter? I mean, seriously, the vulnerability that comes from the mistake, the strategic mistake made by Europeans to allow themselves to become as dependent as they had on energy, as Dan was discussing, from Russia, is an enormous vulnerability right now. And furthermore, the fact that a country in Ukraine, there's a big delegation here right now, is fighting for their survival, fighting to avoid being wiped off the map by the president of Russia. And they're doing that fighting in part so that the Poles don't have to, so the Balts don't have to. The Europeans do feel that. Not all of them, okay? Maybe you talk to Belgians here, maybe they don't feel as strongly about that. The Germans do. The Poles do. They matter. The Finns and the Swedes, who are about to join NATO, do. So, I mean, don't underestimate how much of a change this reflects for a Europe that for 30 years felt like national security didn't matter for them.
How do we support them? We had Alexander Stubb here, and if it's every nation for itself, a phrase, Ian, that you codified, from 800 miles of the Finnish border down to Erdogan with the Turkish lira through 16, and the incredible calculus he has with the Dardanelles, the Bosphorus, and up to the Black Sea, in that huge span of the new Eastern Front, how does America respond?
Well, $40 billion is one way.
Money
is
it's
one way. Look, I'll bring back the Biden-Taiwan thing. When Biden says the United States will defend Taiwan, my view is what he's saying is not changing the policy. Biden feels like we're defending Ukraine. Not because there aren't boots on the ground. They're not doing a no-fly zone. But are the Americans defending Ukraine? I mean, when you talk about the level of sanctions, when you literally freeze half of Russia's global assets, the central bank, when you literally cut them off from the G7, when you support with the Ukrainians with the intelligence, with the money, with the arms, the reason the Ukrainian government still exists is first and foremost because of the courageousness of the Ukrainian fighters, but secondarily because of what the Americans, the American allies are actually doing. And if Putin had any clue that was going to happen, he wouldn't have invaded.
Is an advantage for Mr. Putin the new character of American isolationism? Is it a different isolationism?
He thought it was.
He thought it was.
He thought it was.
But what is the character of our new isolationism if we're going to choose to engage in China or choose to engage in Ukraine?
Look, I think that if Trump gets the nomination for the Republican presidency, and he says, why are you sending $40 billion to the Ukrainians? Why is this our fight? Why would we antagonize the Russians? Which, by the way, his son has been tweeting over the course of the past few days. I think the view will be different than it is today.
Meanwhile, we just saw the U.S. Treasury Department agree to end some of the exemptions that's basically going to force Russia to default on its debt.
Right. People are surprised they didn't do that a month ago, by the way.
Correct.
Yeah.
But how much of a liability does this become that the U.S. is using and weaponizing the financial prowess of the nation in a way that it really hasn't before?
I think that the United States is showing that some red lines actually matter. Maybe not Obama's red line on Syrian chemical weapons use, but this maybe not, Bush's line.
But is that how it's being perceived by the rest of the world?
It depends on who you're talking to. I think the Chinese are taking lessons from the fact that the Americans and the Europeans actually really do care. Certainly that affects the way they think about Taiwan. But you're right. I mean, the dollar is being weaponized. The American financial system is being weaponized. But you know what? Where else are you going? I mean, if there were credible alternatives, then I think that there would be a significant challenge to America's global reserve status. But if my grandmother had wheels, she'd be a bicycle. I mean, those are not useful comparisons.
Well, do you see any kind of move away from the U.S.? Does this basically increase the fragmentation that we're seeing and, frankly, the strength of the alliance between, say, China and Russia and even Saudi Arabia?
No.
You don't think so?
No, I don't. I think that the Chinese are angry, and I understand why they're angry, because they have a similar worldview with Putin. It's very aligned. But the Chinese economy is 10x the Russian economy. So are we seeing them break American sanctions? No. Why? Because they don't want to lose their business with the Americans, the Europeans, the Japanese.
Right.
Are we seeing them provide military support to the Russians? No. What we saw is that a China that feels antagonized and annoyed did some military exercises with the Chinese while Biden was in Asia. Symbolically important, economically useless.
The single biggest thing I've gotten wrong in international relations was the end of Yeltsin. What does the end of Putin look like?
No time soon. I mean, the likelihood that Putin's going to be removed is extremely low until after it happens, right? I mean, clearly, if you're thinking about trying it, you're not letting anybody know, or it's it for you and your friends and your family. But the fact is that Putin is quite popular in Russia right now. And it's not just because they control information. It's also because they believe that they've been humiliated by the West for decades, and Putin is the guy that is saying, I won't have it. That's populism. You've seen it in the United States, you've seen it in Brazil, you've seen it in a lot of countries. If Putin leaves, that feeling of resentment and antagonism towards the West, towards Ukraine, well, no, it'll be someone else from the National Security Council.
I got 10 seconds. How many times did you rewrite The Power of Crisis?
Since it had to go to press on the 26th of May, those last 2 days were very significant.
Very good. Dr. Bremer, thank you so much. Ian Bremer is with Eurasia Group here on The Power of Crisis in Davos. We're going to continue forward on this somber day for America. Thrilled that Nella Richardson will join us, Chief Economist at ADP. From Davos, Lisa Abramowitz and Tom Keith, stay with us on radio, on television.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In Uvalde, Texas, authorities say a teenage gunman went from classroom to classroom at an elementary school, opening fire. At least 19 children were killed, along with 2 adults. A number of others were wounded. The gunman was shot and killed by law enforcement. President Biden demanded action to curb the violence. Gun control legislation is stalled on Capitol Hill. Ukraine's President Volodymyr Zelensky says there are no prospects for diplomacy unless Russia pulls troops back to their pre-invasion positions. He vowed that Ukraine will fight until Moscow returns all of its territories. Zelensky spoke by video link to a breakfast meeting in Davos. China is all but certain to miss its economic growth target by a large margin. For the first time ever, put the blame on COVID-0, which has hammered the economy. Economists' median forecast for Chinese GDP growth this year has dropped to 4.5%. That's a full percentage point below the official target. Experts think the GDP goal will be downplayed whilst jobs becomes the priority. And British Prime Minister Boris Johnson has received the long-awaited report on lockdown parties in Downing Street. He's now bracing for a wave of criticism. Civil servant Sue Gray's report says many of the events should not have been allowed to happen. Johnson plans on addressing the matter before the House of Commons. And the British government has approved the sale of Chelsea Football Club to American investor Todd Bowley. He's paying $5.3 billion for the London club. Russian billionaire Roman Abramovich was forced to put the team up for sale in the wake of Russia's invasion of Ukraine. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
My main concern is to
to work to avoid recession. I think it's still possible. We have a very low growth in the European Union, but I think with a good interplay between monetary policy and fiscal policy, we can avoid recession.
Oh, the public officials, they tap dance through the crises here at Davos. Paolo Gentilini speaking with Francine Lacroix, there, the EU Economy Commissioner. Lisa Bramwitz and Tom Keene. And right now, Chris, if you could go wide to camera 2, I want to give you a vignette into what Davos is really like. Here at the Economic Forum, when you're getting ready for the next set, you listen to Lisa Bramwitz and Neela Richardson talk about boys. And it is painful because you come over here and you don't leave behind America, do you?
You know, whenever you start talking,
behind.
I have no idea what's going to come out of your mouth. And I'm like, no, no, no. We're talking about our children for everybody, not some sort of, boy crazy that you might be implying.
The surveillance world wants to know, are they going to survive till you get home?
They will. But it speaks to the blurring of the lines between work and home, which we've all experienced.
And we're living in real time.
Right.
That's one of our crises right now,
Yeah, exactly.
with boys being worse than girls. We all know that. Joining us now, Neela Richardson, Chief Economist at ADP and proud mother. The trends here are international, but there's a domestic overlay. Mr. Gentilini, speaking of recession, I'm worn out by it. Brian Moynihan of Bank of America making clear, yeah, it could happen, but no. What is the official call of your esteemed group?
I think that the fundamentals in the U.S. are still pretty strong. Whenever the Fed starts raising interest rates, the specter of inflation goes from the back burner to the front burner, and people are talking about it. I also think that 10 years of economic expansion has dulled our senses that recessions are routine. They happen periodically, and it doesn't imply that even a recession will be deep or long. But that being said, I think globally there are going to be countries that have some really serious challenges, and the purpose of Davos is to go beyond the domestic and recognize that what happens abroad doesn't stay abroad, it comes back home.
So what's been the most notable thing that you've discussed while at Davos about that interconnectedness?
I think this tension around deglobalization is being dismantled. And so this is my hope. With all the concerns and crises there are in the world, when it comes to everything, even my perspective, something very domestic, labor markets, you can't stay local. Not even with labor. If you look at the trends that are moving the jobs market, the real economy over the next 10 years, it's demographics and digitization. Those are not local phenomena.
So we're talking about a lot of secular changes amid some of these crises that we're talking about, whether it's the Ukrainian war that's very much focusing the conversation or the shutdowns over in China. People are honing in on data that is starting to slow, soft data. Do you think that will be reflected in the hard data enough to really move away from some of the hard landing scenarios?
The risks are accelerating, and I think every country has experienced the pandemic slightly differently. And so there is no guarantee that there won't be turbulence for everybody. We're hoping that there won't be crashes, but hard landings, I think, are inevitable.
Oh, excuse me.
Sorry, no, that was my bad. But
was that your bad or mine? As a group bad, folks. We call that
definitely
in Davos
mine.
a group bad.
I
Continue,
own it.
please.
But where do you expect the hard landings to come?
The places where the food crisis is most acute. So I know that we spend a lot of time talking about monetary policy.
Right.
I'm coming from the real economy, and nothing's more real than what you put in your mouth.
Okay, let's get on the IS curve. This is important. I had a panel this morning with Gita Gopinath, Mazzucato, and Jim Shade of Maersk and of Siemens. And I quoted from the New York Times in the paper this morning, 50% of renters in New York now pay over 50% of their income for their monthly rent. The middle class, and you, ADP guy, they know this better than anybody. The middle class is flat on their back. Is there a policy prescription you see in Washington to not protect them, but assist them as we come off this high nominal GDP?
The operative word in that question is now. I would argue that that's been a decade-long or more challenge.
Agreed.
That the housing market has been chronically undersupplied. In fact, at least New York City has, subsidized rents in a way that most of America doesn't have. But it is a key challenge. It's a challenge that there used to be a housing platform around, but that platform was dismantled during the Great Recession, and it hasn't been completely restored. And so we do have a policy challenge when it comes to affordable housing, and it's everywhere.
How alone is Brian Moynihan? He pops to $22 per hour with a set of other initiatives for people under 100,000. Is he alone, or is that a new trend for rich, fancy America?
I would argue, yes, he's not alone. There is a trend, and I think we'll see that continue. But there's only so much raising wages will do to address the chronically low housing supply.
Yeah,
it just
at
makes
least
the
doing
rent
something.
Absolutely, and in the short term, that's really, really valuable. In the longer term, you have to build, and that requires investments at a local level, which is a challenge in this country.
When do you think that we're going to see an appropriate level of wage gains? And I say this because, talking to Tom's point, people are now saying the wage gains are too problematic because they're going to just fuel inflation. What's the appropriate rate that we should be looking for?
Depends on who you ask, because if you look at the people who've experienced the greatest wage gains, that's the lowest quartile of people who are getting paid right now in terms of the hourly wages. They are actually making year-over-year wages, according to ADP data, of 8.3% year on year.
What's the middle doing?
They're keeping up with the inflation. It's closer to 3%, Tom, on the middle. So the lower, but you have to look at not just the rate of change, but the levels. What that 8% represents is basically less than $2 an hour. It doesn't even fill your gas tank.
Okay, this is important.
So that's really important in terms of...
Most important domestic comment we've heard since we've been here. What's the integrand, the length, and the x-axis of this negative wage growth? Are you looking at 3 quarters, or are you looking at 3 years?
I think 3 years. Remember that even with 10 years of expansion, it took a very long time to see anything other than wage stagnation. It took a long time to see an acceleration of wages at the low end. 10 years. If you fast forward that to 3 years, I hope you see stronger wage gains than inflation, but it's not guaranteed, and it's not happening now, that's for sure.
We'll continue with Neela Richardson on our Jobs Day. When's the next, I've lost the calendar, early June, we have a Jobs Day, right?
Yeah, what month are we in? Yeah, in a couple of weeks.
Neela Richardson there with ADP. For that, and then on to the Fed meeting as well. That was brilliant.
Yeah, just
there's
fantastic.
Some color there, and again, it's about the middle class. I don't care what the outcome is, flat on their back.
Yeah, and getting actually into a worse situation as the other polls benefit.
Yeah, exactly. We're going to continue here. The markets are much quieter than they were yesterday afternoon. We'll go with that. Coming up, Christopher Harvey, Wells Fargo. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must. for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus Omicron variant still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We happen to be in a very bad inflation situation that puts the Fed in a box.
The Fed and rates going up with slowing growth, that combination is pretty deadly.
When these growth stocks stop growing, it's a big problem.
Maybe in the near term we get a little pause because the Fed will probably follow the forward curve up.
I think it's very important for the Fed to rein in inflation as soon as possible.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on television, on radio from the World Economic Forum in Davos, Switzerland. A most different Davos in May, not January. A most different Davos. It is somber, but not, Lisa Abramowitz, like America.
No, it is not like America, where we are looking at a shooting, the worst since the Sandy Hook shooting in 2012, at a school with 22 now confirmed dead. How does this keep happening, Tom? As a mother, as a human, as an American, how does this keep happening?
It is American asunder, and as we've heard in the last hour, we're going to study this here with moments from the lawn of the White House. It is about an America divided and led by the peculiarities, I'll get that word out, it's too fancy for me here in Davos, but about the United States Senate. That seems to be the focus point for both Democrats and Republicans. Our focus point is to continue the conversation. Real market upset yesterday, no question about that. Markets more stable today, yields stable, dollar doing better. Turkish lira, again, is a really difficult story for Mr. Erdogan. But Lisa, I think we carry forward the conversation before we go to Anne-Marie.
And honestly, there is this issue where you're dealing with dueling tragedies, right? So we're talking right now about the tragedy in America. Very much dominating the Davos conference has been the tragedy in Ukraine, and how this reshapes Europe, how this reshapes energy dependency, and how much of an existential question that becomes.
I was not aware on radio, Turkish lira up to 16.33. That's a wow statistic for the Black Sea. That'll be one of our themes here this morning on the war in Ukraine, and it's been some difficult news in eastern Ukraine in the last number of hours. For the President of the United States, it was most difficult last evening in the Roosevelt Room.
Where in God's name is our backbone to have the courage to deal with it and stand up to the lobbies? It's a time to turn this pain into action for every parent, for every citizen in this country.
the president. Whatever your politics, it is something we have seen too often. Lisa mentioned Sandy Hook, but there's so many others, and many of them not reported beneath the headline data, if you would, and beneath the headlines of America. It is our chronic problem. From 1600 Pennsylvania Avenue, Anne-Marie Horton. Anne-Marie, what will you focus on this morning?
Well, this morning, Tom, I think after hearing the president last night really pleading with Congress to do something, he was clearly emotional and also obviously very angry at just the state of affairs in America, given that once again, he has to console a nation. You know, he just got back from a trip in Asia, but the day before, he was talking about another shooting in Buffalo. And then he got back off that plane from his international trip, and then yet again, he's talking about another shooting. So today, I think it's going to be about whether or not there is potential for the Senate to act on legislation that the House passed over a year ago.
Anne-Marie, what does the Texas delegation do today? The governor, the senators, the Congress people, besides sending thoughts and prayers?
Well, there's going to be a lot of thoughts and prayers, and there is a lot of uproar from Americans about the fact that they're over thoughts and prayers. 90% of Americans just want basic background checks to be part of the law. It's a tough situation for Texas because obviously the president is going to be dealing with Governor Abbott. He's going to be on the phone with him, as he has been, making sure that he knows that he has the support of the federal government. But you have a state and a governor that once before bragged and was upset that Texas wasn't #1 when it came to firearm sales. At the same time, they are dealing with this tragedy. An 18-year-old on his 18th birthday bought 2 rifles, and then he went into a school. And also there were law enforcement shooting at him, but he was wearing body armor. At the same time, this horrific tragedy with a death toll of 19 second, third, fourth graders. These are 7, 8, 9-year-old kids. You then have over the weekend an NRA convention. So it's very poignant, Tom, to bring up Texas, because it's going to be interesting to see what those local lawmakers come out and say and do.
Anne-Marie, what do we expect to hear from the president today at 4 p.m. Eastern?
So he's going to be talking about policing and public safety, but given this tragedy, he's obviously going to have to address this yet again. I mean, he addressed it last night, but I imagine today there's potential for him to come out with fresh pleas on Congress, and potentially questions. Obviously, some shouted questions last night at the Roosevelt Room were whether or not the president would go to Texas. Would he go there to console the state? I imagine we'll be hearing the likes of those lines this afternoon when we hear from the president.
Anne-Marie, thank you so much, reporting through the day from the White House. We will continue with this coverage, but it was particularly David Weston in Balance of Power, 12 noon in New York. But right now, we try to get back to economics, finance, and a stock market that won't go up. Christopher Harvey joins us, head of equity strategy at Wells Fargo. Chris Harvey, it is somber in the bear market as well. How bear is the bear market this morning, and what is the distinction in your strategy that has changed in the last week?
Really no distinction and change. We have taken off a fair amount of short exposure. A lot of the really high flyers, we think, the catalyst that we thought would bring them down has brought them down. We're not being greedy, and at this point in time, we're beginning to change our view on growth. I know a lot of people don't like growth. We haven't liked it in a long time, but our first step is to take off that short exposure on the high flyers. The other thing that we're looking at break-evens. Break-evens are now in that 250 to 275% range. That's pretty positive for growth, because what's happening is monetary policy and other issues are starting to slow down the economy, and growth does very well when growth slows down.
Let's put this into English, Chris. When do you start buying big tech?
Oh, gosh. I don't think you at the end of the day, I don't think you can just paint big tech with one paintbrush. There are companies that have good valuations and they're steady growers. And that's what you want to focus on, whether it's big tech, small tech, medium-sized tech. You want companies that are steady growers that are trading at reasonable price, no matter where they are.
Chris, we're looking at a narrative that's shifted. As you mentioned, break-even rates have actually dipped to the lowest levels if you look at some of the longer-term ones going back to March, right? We're looking at basically people pricing in a slowdown. Have they gotten ahead of themselves based on the actual concrete data that has not reflected that?
Lisa, we came into this year saying there's going to be a slowdown, and that's what you're seeing. A lot of people are calling for recession. I think recession or recession talk is a little bit premature, too early. But we're in a slowdown, no doubt about it. This is the part of the cycle that we're in. And now when you start to normalize interest rates, you normalize monetary policy, that slowdown gets more aggressive. The other thing that we start to see is margins are being compressed because people can't raise price or companies can't raise price as much as they want to or as much as costs are going up. That creates a problem. That creates a lot of issues in and around the stock market. But overall, we're in a slowdown. We'll continue to be in a slowdown. But if you look at the underlying fundamentals, a lot of cash, and recession calls, I think, are very premature.
Chris Harvey, talk about the equity market and how you synthesize Wells Fargo economics. So much of that was invented by John Sylvia of a number of years ago, and Sylvia was front and center on the job market. What are you hearing from Wells Fargo Research and Wells Fargo Economics about a fully employed America, and then roll that into what it means for the stock market?
Yeah, Tom, that's a great question. And Tim Quinlan and I talk almost on a daily basis. I talk to a lot of the economics team, but Tim and I talk almost on a daily basis. So one of the things that he points out is if we're going to have a recession, it should manifest itself in the job picture, in unemployment, and the place to look is in claims, because that's the first place that you're going to start to see the stress. If claims start to go up, then you get really worried. But at this point in time, claims still remain pretty well behaved. But when they start to spike, if and when they do start to spike, that's when you really have to worry about it, because that's going to feed into unemployment. And every time we've had a recession, unemployment has spiked higher.
From Davos tomorrow, Michael McKee will be with us on claims in the United States. You'll see that at 8:30 New York time. Chris Harvey, Lisa mentions the tech and the variousness of profitability of tech. What kind of profit do you study when you look at the FANGs in big tech? On the income statement, when you say profit, what do you exactly mean?
So we're looking at a couple things when we look at any company. So from a quality point of view, we're looking at net debt to EBITDA, so we want good balance sheets. On the profitability side, we're looking at ROE, ROIC. We're also looking at profit margins. And at the end of the day, what we want companies, and we're looking at companies based on multiples of earnings, not multiples of revenue. If you're looking at companies on multiple of revenues, it's been a really tough go. I think it will continue to be a tough go. But those are some of the things that we look at.
Chris, as you move to neutral from being bearish, from at least on the market's perspective, perhaps the view is going the other way when it comes to sentiment of retail investors, of households, which actually own a much bigger proportion of the market. How does that factor into your view?
We do look at retail exposure. It's not a big enough part or component in what we do, but on a daily basis, what we want to see, and a lot of people talk about, hey, we're going to have this big washout and retail is going to be a major part of that. I'm not sure that's true, but we watch and we look at how much retail is involved in the space. What I think is going to happen, and one of the big liquidity events that's going to transpire very shortly, is we're going to have that MSCI rebalance. And a lot of people are looking for this big liquidity day. A lot of people are trying to figure out when and how they can reposition their book. And we think this is going to happen at month end, quarter end, because there's going to be a ton of liquidity related to the index and a ton of liquidity just because it's month end, quarter end. And that's going to be your big liquidity day. That's when people are going to change around their books.
What about the relationship, though, between consumer sentiment and what they see on their balance sheets when they take a look at their 401ks?
You know, there's been, depending on which consumer sentiment indicator you've been looking at, it hasn't been very good. One of the things that we harp on is if you look at the consumer's balance sheet, close to 25% of it, I think it's about 23, 24% of it is tied to equities. And if the equity market is down double digits as it is now, but stays down for long periods of time, that's going to really bleed into sentiment a lot more. That's going to bleed into consumer spending, and that's going to really affect the economy a lot more than it has in the past. And I'm not sure the policymakers really understand the degree that it's going to affect sentiment and the degree it's going to affect the economy. Things happen a lot quicker, and one of the reasons why this time around it's happening a lot quicker is because of that exposure.
Chris Harvey, thank you so much with Wells Fargo this morning. Lisa, the headlines come out across equities and bonds, currencies, commodities, and one of them, how do you pay debt? And not a small matter, even with the strengthening Russia ruble. I look at the Russia of 2042, and I'm sorry, at 29 or 30% yield, whatever it is. Now they want to pay it in rubles, I think?
Well, honestly, what we're dealing with is the United States is not allowing them to pay coupons to their U.S. investors. They are saying you're not allowed to. That violates our sanctions on your financial system.
So what?
And so Russia is responding by saying they're still going to service those debts. They're going to do it in different ways. But this is setting up a fight on what does it mean to default if you're not being even allowed to make those payments.
I've been, too busy having, Tang and fondue here. Help me here with the idea of how strong the ruble is.
Yeah.
Is Mr. Putin prospering? I don't mean to be cynical, but...
This is interesting. There was a great article about this by Paul Krugman. Not necessarily, because they're not able to spend it on anything if you take a look at their actual imports. It's because oil prices are up.
Lisa Browitz and Tom Keene, an eventful, much more pleasant day here in Davos, Switzerland. Please stay with us from the meetings of the World Economic Forum on radio and television. This...
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Talking to people here, my own sense on balance is that the Eurozone and European Union will not go into recession. There will be a slowdown. But, you know, labour markets are so tight. Right. I don't think we're facing into recession. Not as rapid growth as we might have hoped for, certainly. But, you know, who knows, and we can't take that for granted.
Perhaps our most delicate conversation here at Davos, the former Prime Minister of Ireland, and Lisa, boy, was that a tiptoe through the politics of Northern Ireland and Ireland. Now the Trade Minister, Leo Varadkar's really something there.
Yeah, he didn't want to basically overstep, and yet there isn't the support yet for the unification that so many do desire. A
backstory, but front and center really on the somber tone here in Davos, the crises that are being confronted, being addressed in a May Davos. And again, I should say this, Adrian Mock telling me there will be a January Davos.
All right, well, I guess everybody has to get their parkas out.
I guess so. I see you in Bogner. I can see that. Right now, I'm going to have a lot of fun because getting the headlines on the New York State Thruway is General Electric in Schenectady, and far off to the west was a landmark of my youth. And when you drove down the turnpike near Syracuse, New York, their dominant was Carrier is a manufacturing might of America. If you go to Cornell, you know this. David Gitlin joins us now, our Chief Executive Officer of Carrier Global. I think the first Carrier you saw was at the Rangovian Embassy when you were in Ithaca a few years ago. You guys, and President Trump knows this, have had to make not a tough decision, but what's significant about Carrier is the set of tough decisions over 30 years to compete domestically and compete globally. What have you learned from it as an institution?
We've learned that the work should be where the work should be, and we have to remain competitive. We've been increasing jobs significantly in the United States, but we've been upskilling. We've been adding digital, we've been adding engineering, we've been adding manufacturing jobs in the United States, but the higher end jobs. So we have put work globally. We have work in Mexico that we're very proud of. We have work throughout Europe, including Eastern Europe. We have work in Southeast Asia and of course in China. But the work should go where the work should go. It should be very natural to be in that environment, and then we keep upskilling in the United States.
Sell American labor. Somebody in Syracuse, New York, that would go to the Carrier Dome to watch Syracuse play basketball. Sell them now on how they are advantaged by a Carrier job in Mexico.
They are advantaged because we've actually, the jobs that we have in Syracuse are much higher, higher content, higher labor, higher skilled than they used to be in the past. So we've been adding jobs, again, throughout the United States, but the kind of the level and the caliber of the talent that we've added in the United States has been tremendous.
And how much have you had to pay people in order to do that?
We have been having to raise rates. If you look at places like in Athens, Georgia, or Collierville, Tennessee, or Indianapolis, our starting wage has gone up. It now, in some cases, approaches $17, $18 an hour. It's up from just a couple of years ago. But it's also, again, it's moving to the higher skilled roles, and we've also added automation as well to some of our factories.
Okay, automation is exactly where I wanted to go at a time when everything has chips in it. We were talking about that. Evidently, hair dryers have chips in it now, as you told me. But
every day when I use one.
Yeah, exactly. Please dry my hair. I am wondering whether you're able to get the chips, whether you're able to get the supplies that you need in your global company.
It's the single biggest challenge we have. 2/3 of all of our delivery issues come back to chips, whether it's chips we buy directly or chips that our tier 1 suppliers buy, you know, our compressor motor suppliers. So we have worked directly with our chip manufacturers. We've redesigned a number of our chips around chips that are available. 30% of our critical chips we will have redesigned by the end of the second quarter, 50% by the end of the year. But it's a challenge. The additional capacity cannot come online fast enough. It'll start to come online next year, but it needs to come online.
How do you plan ahead at a time when people are looking at a zero COVID policy in China that could potentially keep lockdowns in a rolling fashion, some sort of reality for the foreseeable future?
Well, we are in China for China. You know, what we have is a number of factories in Shanghai, but also throughout China. We have over 1,100 suppliers in China. But what we're doing is looking at balance. We are adding more supply base to Southeast Asia to supply that general region. What we've done is more of a regionalization. You know, we still believe that the economy is a very global economy. You know, like reports of the death of globalization have been highly exaggerated. We are still very much a global economy, but what you're going to see is more regionalization. Southeast Asia and China for China, Eastern Europe, many parts for European, Mexico and other parts for the Americas, including the United States. So I think we'll go to more regionalization, but we'll still be very much a global economy.
You are of Sloan and the technological giant, the Massachusetts Institute of Technology.
Yes.
Plain and simple, can we keep the technological edge that Solo wrote about in 56 and 57?
We can, but we have to invest. You know, American companies...
What do you need to have incentive to invest? Your pressures to return cash. If we were doing a straight interview, I'd be saying, what's your use of cash? That takes cash away from investment, right?
We've invested significantly. 2 years, if you look at us in 2019, our R&D was $400 million a year. This year, it's going to be $550 million. So we've decided we will be aggressive on reducing G&A. We're very aggressive in supply chain and reducing discretionary costs. But in things that drive growth, salespeople, digital, R&D investments, we are significantly doubling down on our investments.
I want to just pick up on something that you were talking about in terms of broadening and regionalizing where you are. We just heard from Premier Li of China and that they're facing the worst situation going back to the height of the pandemic in 2020 and possibly even worse. How isolated will they be? Since the Chinese delegate, they are not here to address what you see as the #1 issue facing your company.
I don't believe that China will be isolated. I believe that, you know, we've committed to grow long-term 6 to 8% a year. We can't get those kind of growth rates without investing in China, without investing in India. Saudi Arabia looks very strong to us, Vietnam. So we're a global company. We think that China's going through a real rough patch with its zero-tolerance policy around COVID. But China will come back. The growth will come back. What it'll be this year, 4%, 3%, whatever, who knows? But China for the long term will be a growth vector for all of us.
The romance of the New York State Thruway, moving west from Generous Electric to Carrier to Eastman Kodak, it's vaporized. Where is it in America today?
You see a lot of labor in the southeast of the United States. You know, we've added a number of jobs to Athens, Georgia, to Collierville, Tennessee. But what you'll see in places like upstate New York is the shift to more digital roles. We've changed half of our digital organization is new over the last 18 months. So we are continuing to refresh our organizations, add more highly skilled labor in some of our key functional areas.
What does digital do? When you say digital, what do you mean?
We have, for example, we have 2 key ecosystems we focus on, buildings and cold chain, and for each we've added a platform. So for buildings, a building, well, not really like this because it's kind of a tent, but we would have...
It's kind of a tent.
Yeah. No need for an HVAC system.
This part of Davos brought to you by the Carrier Space Heater. We did it this morning. Continue.
Tom, we would have a platform that we call Abound, and what it does is it gives you visibility to your indoor air quality, your emissions, so you, on a single pane of glass, you could see all of your factories, all of your facilities globally, and you can see your emissions at any single point. You could say, why are my emissions greater in China? And then you can then take action. And if I may, Tom?
We're going to break, but continue.
No, we've got 20 seconds left. We'll finish later.
Okay, what I was going to say is that it's critically important, especially in Europe now, where 45% of their gas comes from Russia, and 60% is for heating.
My window, what I look out on, is the McDonald's on 3rd Avenue. Dave Gitlin, thank you so much with Carrier. Good morning.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Good morning, everyone, from the World Economic Forum in Davos. Without question, Monday, Tuesday, Wednesday, our most pleasant day here in May. It is the mountains. It's colder than I expected.
Yeah, I'm sure that everybody is just crying for us, though, about the weather. I will say it was cold yesterday, but it is beautiful here. We're very lucky to be here. And frankly, not just for the scenery, but also for the conversations. I have found them fascinating to hear what's on people's minds and how they plan to spin some sort of focus going forward amid such uncertainty.
We are, to give you a location here, for those not familiar with a really original map of the very independent cantons of Switzerland, the 13th century church of Davos. For those of you on radio, it is a spectacular valley shot. Looking down to Italy and over to our east, really quite close, is Austria. We are nestled down in the southeast corner of Switzerland. Nestled here as well are too many, looking at the sundry crises we face right now. Last week, a crisis in the market. Even yesterday afternoon, a crisis. We're crisis-free this morning. A report from Kaylee Lyons.
Yeah, no real crisis is evident at this point in the futures session, Tom, but we have rolled over from the earlier gains. Right now, S&P 500 futures right around lows of the session, down about 16 points or so. You're starting to see, as that plays out, a little bit more of a bid coming into the Treasury market. The 10-year yield down 2 basis points, just shy of 273, but you're definitely seeing some larger action taking place in foreign exchange. It is a stronger dollar story today, stronger against everything in G10. The Bloomberg Dollar Index up about 0.4%. As for some of the more micro stories that are out there, of course, the one that captured all of our focus yesterday was Snap, out with a profit warning on a deterioration in the macroeconomic environment, weighing on advertising. The stock was down 43% yesterday as a result. It's down another 0.6% in pre-market trading this morning. Other stories that are out there include Nordstrom, which actually raised its outlook, showing a bit more resiliency for the higher-end consumer in the face of inflation. It's up 4%. And Toll Brothers also getting a lift to the tune of about 2 percentage points, even after cutting its deliveries outlook for the year. Commentary around the impact of higher mortgage rates, cooling some demand from the unprecedented pace we have seen in the housing market over the last 2 years, Tom.
Kaylee, thank you so much. Greatly appreciate it this morning. A conversation that we would always have in New York, and I know the global Wall Street leans forward. When Priya Misra speaks, she's head of global rate strategy at TD Securities, and within the calculus of full faith and credit, finds a point where we are in what James Bullard would call a new regime. Priya, what is our new regime?
So we've had a bunch of regimes actually this year. I think the first part of the rate move was led by the front end, was inflation. Then we had the long end starting to get engaged, which was because of quantitative tightening. And what I'm arguing, we're in a third regime, because now the rates market is starting to price in growth concerns, which is why the yield curve has steepened, interest rates have fallen, led by that front end. I think as people are seeing the tightening in financial conditions, and we've started to see some signs of interest-sensitive sectors slowing, I think now the market is saying, well, the Fed may be overdoing it, and therefore they may not be able to hike much above neutral. That's why I think cross-asset correlations have come back, and I think they're here to stay. I think growth concerns are front and center. The markets move beyond the next few meetings of the Fed, where, we know that they're going to go 50 basis points the next two meetings. But what after that? I think that's the big focus. And, the rates are now pricing in growth concerns as well as what happens in risk assets.
Priya, how real is this narrative? Because we are seeing what you're saying is growth concerns rising to the fore when it comes to concern, not necessarily the economic data, even though there has been a bit of a softening. And you heard Jay Powell basically come out and say, we're not going to be nuanced about this. We need to get inflation down. Is there a disconnect here?
I think the issue is the Fed's tolerance for inflation. I think the market understands, and I'm sure the Fed understands, that monetary policy works with a lag, and there's a large part of inflation that they can't control. I think what we don't know is what is clear and convincing signs of a decline. Is inflation declining from, PCE from 6 to 4? Is that clear and convincing? And if the Fed can tolerate that, they can try and get that softish landing that they're hoping to get. If they want to get inflation down to 2% within 6 months or even 1 year, they're going to have to overdo it. They'll have to trigger a big growth slowdown. I don't think neutral rates are much higher. And so the market doesn't understand the tolerance for the Fed. And I think the Fed is trying to keep all options on the table. They've had an inflation credibility problem for a while. So I think they're not going to commit one way or the other. And we're going to have to watch data. And that's what makes, I think, that concern that if inflation doesn't show this clear and convincing sign, that the Fed may not have the option to slow down, and then that softish landing looks like a dream.
Priya, what you said is actually rather radical, that the Fed might move away from that 2% target, even though they continue to reaffirm it. What kind of target do you think is appropriate for the end of 2023?
So I think they're going to target that 2%. I don't think we're talking about a rise in the inflation target. I think we're talking about some tolerance around getting there, in 3 years or 4 years. Maybe if, inflation is, I think the SEP that we get from the June meeting is going to reflect a higher inflation forecast for this year, 4.5%, 5%, next year 3%, and maybe by 24 we get to 2%. If it takes a year longer to get to that 2% and the Fed is able to achieve that softish landing, I think that's success for the Fed. If they want to get to 2% next year, I think the only way out would be a pretty big slowdown.
Priya, I'm inventing a phrase right now in honor of you, the Bostic meeting. Which meeting is the one that Raphael Bostic says will really lean over the desk and think about where we're heading? Not June, but do you have a Bostic meeting out there where the tip point is?
So I think, President Bostic's the first one to highlight something that we've been saying for a while, that the reaction function of the Fed is going to change once they reach neutral. Like, I would argue there's almost no reaction function right now. They want to get to neutral, inflation is too high. When you get there, we're thinking that September might be November. It really depends on, what inflation is doing. I think if we see some signs of momentum slowing in wage inflation as well as, I would say, service inflation, at least peaking out, and that might happen by November. I think that's the meeting. And it's not just President Bostic. I think you're going to see more divergence at the Fed. I think there will be those who say, let's not overdo it. Maybe we get there, a year later, and then those that say, no, we've got an inflation problem, let's keep going. I think that debate is ripe in that, as they get close to neutral September. So in the fall of this year is, I think, that key inflection point for the Fed.
Yeah, but Priya, what you just said there is sacrilege. Like, you ought to be in Davos with everybody else speaking sacrilege. You said there's no reaction function. So what's the theory? What's the architecture we're using right now if we're reaction function free?
I mean, I'm sure the